All right, how's it going, everybody? My name's Antonio. I am an aspiring grill master, and it's Friday, so this must be the CEO barbecue. This week we're all over the globe, really. We're starting off in Africa, where we're going to be looking for primarily for gold. Then we're going to be moving over to South America, where we're going to be looking for well, actually, the Vicuña district and close to the Vicuña district as well. So it's going to be gold and copper, but also cobalt and iron ore as well. They're flying over to Canada. Two companies in Canada, actually. One of them is in the Northwestern Territories, also gold. So a lot of gold, I guess, here. And then another one is in Quebec, which is gold and a bunch of other things, but mostly gold and lithium too in there as well. And then flying back to South America for a another gold story, which is going to be in Suriname on an interesting greenstone belt there. So again, uh, I suppose that's about enough of an intro here because we're looking for a lot of gold and we should start to get into it. And as always, though, fair disclaimer, honest confession. The fact that I'm grilling these CEOs shouldn't really mean anything to you besides maybe a little bit of entertainment value if your entertainment threshold is low. It also doesn't mean I'm buying their stock or recommending it or anything along those lines. By far, it doesn't mean that you should blindly do anything either. I still haven't made any significant money in the stock market, so please just don't use any of my opinion or anything that I say as independent research or investment advice. That'd just be silly. Just look at these conversations as what they are. They are conversations. They're general and impersonal, private conversations between two talking heads on the internet. And if you don't enjoy losing money, you should head over to setterplus.ca where you will find the company's official filings. You want to read them and then talk to a professional investment advisor. Make sure to understand what those official filings, MD&As, and financial statements and all that says before taking your own decision in the end, of course, because the mineral exploration, development, and mining industry is among the hardest industries to profitably deploy capital in. I feel like I've said this sentence 100,000 times, but it's just true. I've burned myself multiple times, and I mean, if you can avoid doing that'd probably be nice for you. There are many risks not visible to the naked eye, and you will lose all of your money if you don't do enough research. In addition, I want you to know that Founders Metals and Gold Terra Resources are paying for the production of their interviews, and that could potentially make me biased. I never send in questions up front, and companies don't have editing rights over these videos, but that doesn't mean you should think of this as independent research still, because because it's not. It is paid for, but also because it will include forward-looking statements about uncertain events that may or may not happen in the future. And that all said, first up this week is Sanu Gold, a gold exploration company with three projects in West Africa, Guinea, be specific. Companies listed on the CSE under the ticker symbol SANU, so SANU, where an average of about 80,000 shares trade each day with a 52-week high of 25 cents and a 52-week low of 4 cents. With a market cap of 5.5 million Canadian dollars and 138.5 million shares outstanding, today this is a 4-cent stock. There are 5.8 million warrants and 5.7 million options, resulting in a total of 150 million fully diluted shares. 35% of the company is held by insiders, founders, and close associates. 25% is in the hands of institutional investors, and another 25% is with high net worth individuals. As of the last interim financial statement, which is dated September 30th, the company only had about $225,000 on the current asset side of the balance sheet and almost $800,000 on the current liabilities side of it, mostly in the form of account payables, and there's, of course, no long-term debt. However, I'm going to ask you to review the numbers by yourself by visiting the company's website as well as setterplus.ca because after this financial statement was published, Sanu raised $3.45 million at 5 cents per share. No warrant, notably there. But so yeah, again, just visit the company's website for the most up-to-date information here. Because the financial situation will have changed by the time you're watching this, provided that this is also an active company that's recently started geophysics and target generation. And of course, running a company costs money too. For Sanu specifically, that cost that the typically referred to as G&A cost came up to about $150,000 a month on average over that last reported quarter. Numbers aside, though, as I said, this is Africa. Enter your favorite Leonardo DiCaprio gif here. But Sanu holds a 75% interest in three projects here. They're totaling 280 square kilometers in what is northeastern Guinea, I want to call it, so in the border with Mali. The main focus, at least for this year, as far as I understand it, is the Bentabaye project, which is located on the western end of the Siguri Basin, which is, of course, the basin that hosts the Siguri mine, and that's operated by Anglo Gold Ashanti. But it also hosts the Lefa mine that's operated by the Russians. They're both, by the way, multi-million ounce gold deposits, respectively, 6.2 and 7.9 million ounces. But there's a bunch of gold deposits around them, and in West Africa as a whole, I believe there's more than 300 million ounces that are defined in West Africa on that greenstone belt. Bentabaye is not just a thesis anymore, since it saw a batch of drilling in 2023, about 3,000 meters of it, although it was shallow RC drilling, scratching the surface drilling, as my geo friends like to call it. Just kidding. I don't have any friends. But some decent grades have come back from that RC drilling here with a highlight intercept of 11.4 grams per ton of over 15 meters, with a higher grade intercept within that one of over 41 grams. So technically bonanza then, I suppose. But that was only over 4 meters. And the company, of course, plans to follow up on all that with 10,000 meters of drilling in 2024, which is expected to start by the end of by the end of next month, technically, and that's following again geochemical analysis that was recently completed. Again, this is not the only project Sanu has drilled so far. They've also drilled the Dyna project twice, actually. Initially making a discovery here in 2022, and in total completing 4,700 meters of drilling, again shallow RC drilling, which returned some decent grades over decent widths. Technically, no 100 gram meter holes yet, but there was one that was 99.75 gram meters, so I suppose we can count it up there. And that was 4.75 grams of gold over 21 meters. Again, decent widths, good grades on what is a combined strike length on this deposit is about 10 kilometers. And also what is considered close to surface, by the way, is the drilling, again, as I pointed out, has it was RC shallow, and it's happened between 100 to 150 meters of depth. And same goes for Bentabaye, by the way, and most of the African deposits for that matter, which is part of what makes Africa such an attractive jurisdiction to begin with. That's not it, though. As I mentioned, Sanu holds a 75% ownership in these three projects, but the third project is called Digifara, or Digifara, I suppose, has not yet been drilled, although there are 4 targets on it, and many artisanal workings are present across all 3 of the projects. Not unexpected for this region of the world, of course. So there's a lot going on here, but I'll have to think about shutting up already and giving the word to Martin Pavlicek here, because Martin, you're looking to start your 2024 Giro program in a few weeks, if I'm not mistaken. What's that program going to look like specifically? I don't think there's too many specifics, but yeah, what can you tell me about it?
Thanks for the great introduction, Antonio, and for making time for myself and Sanu today. So this program, we're very excited about it. We've been working since October on doing fairly detailed geophysics, IP, and ground magnetics, and some of that work is still in progress. It should wrap up in the coming couple of weeks, and we expect quite a bit more news updates to flow from that. And essentially, we're doing this geophysics to follow up on the discovery and the very extensive gold-bearing structures that we delineated early last year. And of course, part of that picture is that 11 grams over 15 meters, and it is showing up very well, not only on the more detailed geochemistry that we did since then. We ran a very high resolution, close-spaced survey over the main target areas to better resolve the trends and the anomalies there. And the geophysics, likewise, it's starting to light up very nicely where we have known gold. But importantly, it's showing that the coincidence of the geophysical footprint with the surface gold anomalies is extending for many kilometers away from where we've drilled. So there's plenty of strike to follow. And not to forget that down dip, we've only drilled down to about 70 meters vertically. So there's, it's wide open. Most of the big open pit mines in West Africa, they will quite readily go down to 250, 300 meters vertically. Mm-hmm. For example, the Bankan project, which is now at 5.4 million ounces, Also on the western margin of the basin, discovered by a junior explorer listed on the Australian Stock Exchange. They're drilled off to around 300 meters vertically. So
Yep.
plenty of room for us to grow, not just on the target where we made the discovery last year. There's a bunch of other targets on that east-west trending Bantabai thrust fault, which is the main structure we're chasing. So we'll be following up immediately on that, but then looking to step out, guided by the geophysics and the more detailed geochemistry as we get results in. So lots of exciting stuff coming up, basically from late Q1 and well into Q2, I would think.
Still doing RC though, right? You're not going deeper diamond this time.
Not on this round. We because we get a lot more meters for our exploration drilling dollars. Using RC, it's also much faster. So this round will be mainly RC, and at some stage, definitely we'll have to bring in diamond. To test the deeper parts of the deposit, but also to get a better picture of the structure that you get from diamond core. But the cost is significantly higher, and it's also much slower. Just a bit of background there. RC is very common in these West African terrains. Even the resources are generally drilled out, maybe 80% RC, 20% diamond, even for open pit. Yeah.
Okay.
So, yeah,
Are
especially
you
for open pit. Yeah. More,
are you
you
going
might increase the diamond component as you go deeper into the underground depth range.
right? Well, you're not chasing any copper as far as I could tell, so there's no immediate reason for you to go down there. You mentioned I want to touch upon the Bunken discovery because that's an intrusive related discovery, so I want to talk about that later on. But I'm looking at the map over here on my screen. What targets are you going to? Because most of them are undrilled, I believe. So which targets are you
Yeah.
going to?
So we'll be initially drilling on target 2, and then the other targets, target 3 and 7, we've had some drilling on those as well with some good geological and mineralized intervals, gold bearing. There we will likely go back as well, driven by the geophysics, and then the other targets will be guided by what is coming back from the final analysis of the geophysics. But on the list is target 1, 7, 8 potentially, and 3. So target 2 alone, as it's mapping out right now, is shaping up to be quite a big one.
Yeah, it's also on two faults, right? It's on the Tinkiso fault and on the Bantabaya thrust fault. Um,
Yes, we're every time we get more and more detailed data, we're refining the structural interp. I mean, that's pretty normal as you get more data density. But there seems to be a interesting set of structures there that are intersecting in some places. Some of them seem to be parallel, so potentially some sort of thrust duplex, parallel shallow angle thrusts that are stacked on top of one another. But in other areas, they're clearly intersecting and interacting with some high angle cross structures. So setting up some very nice structural traps, basically for mineralization to form. That's particularly the case at 3 and 7. So we are looking forward to getting the detailed geophysics back from that. That should help us a lot.
are the grades that you're getting, just generally the holes that you're drilling in 2 and in 7, they're quite different from each other in terms of grades, but also in terms of widths. It is that the reason because they're not located on the same fault, or what do you think is driving the different type of grades that you're getting here?
Just to maybe paint a background picture there, the targets 3 and 7 have some very extensive historic artisanal workings on them. There's actually the two targets actually coalesce. So there is an 800 by 200 meter area that is intensely worked at surface. We've digitized off the satellite imagery and by mapping on the ground well over 1,500, so 1,500 vertical shafts, all dug by hand into the deeply weathered bedrock. And some of these shafts go quite deep, down to 40, 50 meters, which is deep for artisanal mining. And our drilling has been quite shallow at the very top of the structures. So it looks to me that a lot of the high grade has been taken out and Some of our drilling even has reported voids that we went through. So I suspect the high grade's gone. We're seeing the same geology. We're seeing the same felsic unit with the same style of alteration, disseminated sulfides, and carrying grades over widths. So I think we've just not drilled in the best spot there. We probably need to step back significantly to hit the structure underneath all these extensive workings and see what it really looks like in the untouched state, basically.
Hmm. There's no artisanal workings on the other targets, or is there?
There are some small workings on target two, but they're relatively small compared to what we have at 3 and 7.
Hmm. Okay, good, good. Let's go back to that point that you made about the Bonkan discovery. It's a predictive discovery. So predictive as in the company. It's a Australian listed company. I was a little confused when I saw that you're comparing it to it, because which the project is close to you, but that one is again an intrusive related mineral system. So what do you think the similarities are exactly between Bankan and Bantabaya?
Well, principally, both all of these gold deposits in the Birimian sequence in West Africa, basically greenstone-hosted gold deposits. The host rock varies a lot, so it's not strictly intrusive related, but it is hosted partially in an intrusive unit. In this case, it's a felsic unit, and in contact with a mafic, it's also quite sheared. And the big difference lies with the central part of the basin, like the Sikiri mine. The Sikiri mine is mainly sediment-hosted mineralization with high-grade quartz veinlet systems within the sediments. Now, on the western edge of the basin, the Bunker deposit is more disseminated style mineralization within a felsic and a mafic unit. And we're seeing the same sort of thing at Bantabai, where we don't actually have a lot of quartz veining, and the mineralization is more related to disseminated sulfides within a sheared felsic unit in contact with a sheared mafic in the hanging wall. So that is a broad similarity, but it's definitely quite distinct from the quartz veins hosted in the grey wackies, which is what you see at Lefa and at Sigiri.
Right. Okay. So,
Yeah.
but still, I'm just looking at the geophysics that you have on your presentation right here. There's also
Mhm.
quite a lot bigger, if I'm not mistaken. So you defined an 800 meter. Oh, but you say that the anomalies are open.
Yes, that was an early snapshot of our survey. We will soon have some updates on that because we're really covering a much larger area. So it's probably best to compare that when the full picture is out.
Okay, okay. You also did metallurgical work on Bantabaya, if I'm not mistaken, which is, I suppose, not typical for that stage of a company or of an asset. It is
Mm.
early days. So what did you do met work, and are you planning any more of that this year?
Um, just to clarify, it's not strictly metallurgical testing that we've done, but we've done what we call a cyanide bottle roll, where we basically take the material and and leach it. So we take a few kilos, quite a few kilos of the mineralized material, and then in the laboratory, at a professional laboratory, it is leached with a cyanide solution, and then the tails are assayed, and you know the assays in of the cyanide liquor will then compare how much gold is coming out in cyanide solution and how much is remaining. We had very good feedback from that. We had between 91 and 93% of the gold came out in the cyanide leach. So it's a QP, probably wouldn't call it strictly a metallurgical test, but it's a very, very good and cheap way to get a good indication of what you're likely to recover in a standard cyanide leach. And we'll do more of that depending on the results and the geology that we see in the drilling this year.
Hmm.
If it's more of the same material, we will probably run a few more tests. That's fair to say.
Hmm. But you say it's inexpensive. What does something like that typically cost you there?
I think one of those samples, which was 10 to 15 kilos of leaching, that would have to be less than 2,000 Canadian.
Oh, okay, so it's really
Okay.
cheap. Okay,
Yeah,
understood.
yeah.
Okay. When you say that you hope to be drilling by the end of Q1, how how and when do you think you're going to be reporting assay results? When I say how, I mean, is it going to be sort of in batches from targets or stuff like that?
We'll be we'll be looking to send batches of samples out on a on on uh, on a collection of drill hole basis, so 2 or 3 drill holes at a time, not to build up too large a stock, and then probably release the results on a target by target basis until unless something really significant comes up early on.
Hmm. Where are you sending the results for assaying?
Uh, so far, we've used SGS in Mali, so fully accredited laboratory. We are looking at some other options as well. There are ALS chemics available also in Mali and Burkina Faso, and there are some laboratories in Ghana also that we could use and access. So we'll be getting quotations in, and not just cost, but also turnaround time will be a consideration.
Hmm. Okay. What are those? I mean, specifically the turnaround time. What's typically the turnaround time for you?
Well, last year, this time, the turnaround times were around 6 weeks, 6 to 8 weeks. We've had early on in 2022, we had much faster turnaround times, up to 4 weeks.
Hmm.
But it varies. It depends on the activity levels in the region.
Right. When you say
Yeah.
activities levels in the region, I'm of course reminded of the issues that West Africa's had specifically, um,
Mm.
specifically that part of the work. How's that affecting you right now? I mean, you say that potentially you're gonna have to choose a different lab there, but anything else?
And the lab is not so much because of any political issues. It's more about turnaround time, I would say, and cost. So it's always good to have some different options. The issues in Mali or Burkina have not really affected us in Guinea. We don't see that arriving in Guinea, to be honest. Um, and traditionally, it's probably worth noting, even with all the changes in Guinea, it has not really affected too much the mining industry in terms of shutting down mines or significantly disrupting production of gold from these regions.
Hmm. Okay. So then you then send it to Ghana. You said, would that, I mean, it's farther away, but you still think it's going to be a quicker turnaround?
That's something we're going to evaluate. Yeah, we haven't decided that yet. We're looking at all the options basically.
Okay.
Yeah.
Right.
So I guess what I'm trying to say, we have several options for laboratories, and we'll choose um, based on a combination of time and turnaround time and cost. Yeah.
Hmm. Okay. Fair enough. The 10,000 meters, how are you going to be splitting that between Bantabaya and Dinah?
We'll focus most of that on Bantabai. I would say 80%, maybe more. And if I'm expecting very good results from the initial batches. So the chances I will focus everything on Bantabai.
Okay, right.
Mm.
And well, I'm asking this because when I look at what's been coming back from Dyna, the 2023 drill program didn't bring back the same great results as the 2022 program did. Well,
Mm.
what's that telling you about chasing this further along strike? Because you're not giving up on it, but maybe you're scaling back a little bit.
Yes, because that we're quite a small company. We need to be really focused with our drilling. So we need to deploy drilling funds where we get the best return for our drilling dollars. Dyna, we like it a lot. It has an extremely large footprint. It's comparable with the other big mines in terms of footprint. It's leaking a lot of gold over many kilometers. We've tested a 300-meter segment of one structure. We have 15 kilometers of structure there, all leaking gold at surface. And we've tested down to 70, 80 meters. So the second program we came back with, we were testing pretty much a different azimuth to see if we can more optimally intersect some of the veins in the system. So on that round, I think it tells us that our first direction was a better one. That doesn't mean there isn't another better orientation because there's many different vein orientations in there. We can't, we have to be quite prudent how many of them we test. But basically, there's such a large strike extent, and typically you would approach this with a very systematic program, and then you'll get into the bullseyes and define your uh, resources from there. Basically, at this stage, the company doesn't have the means to basically do such a large aggressive program.
Okay. Yeah, well, that makes sense. When what you're mentioning here in terms of leaking, that's the well, basically the surface footprints of the of potentially the system that is beneath that. Are you going to be stepping outside of that, or just sort of following along the surface footprints as you drill this year?
We would, if we were drilling, you're talking about Dyna?
Yes.
Yeah, we would follow it along strike and down dip a little bit. Yeah,
Okay. But so not
basically.
necessarily stepping outside of outside of the surface the surface footprints.
No, not at this stage. Yeah,
Okay.
we have so much surface footprint to chase up. There's no real need to go into chasing blind targets at this stage.
Sure. Where I'm coming from with
Mm.
this is because, and this is true for both Dyna and Bantabaya, by the way, but it seems like some of the grades are very high grade, right? So and others not so much. So grade here varies between under a gram in some occasions, um, zero point 0.9 basically, up to, as I mentioned at the beginning, 41 grams in some occasions. And at Dyna, there's 1 meter intercept that I'm looking at over 85 grams per ton, which is nuggety, I suppose is what you would call it. But how do you look at grade variability, potentially it being nuggety and stuff like that?
That's very typical for virtually all gold deposits, and certainly also in West Africa. So really, it's a question of getting enough drill density into the system. Typically, by the time you're at a decent resource level, you'll have a grid of 40 by 20 meters into the main mineralized zones. And with that, you can do the right geostatistical work and define your resources with that.
Hmm.
Within the mineralized systems, and if you look closely at the Bankan system as well, there are some, spectacular holes, and right next to it, you'll have some pretty modest holes. It is just the nature of gold, not just any one particular gold deposit.
Yeah, I'm careful for my own portfolio with negative systems because I got burned once, and so indeed I do want more drilling. You're in West Africa, so drilling is what are you paying down there? Under 200 a meter?
Yes, our all-in cost is around 120 US. It
Okay.
has been in the past. With the jump in fuel prices, it might be a little bit more now, but it's around about that. Yeah.
Hmm. So I suppose the recent deal that you did that's going to be what enough money to complete this 10,000 meters.
Yes, yeah, we're anticipating that we can manage with that. We don't have our drill quotations in yet, but we should be good to cover 10,000 meters with that.
Right. Okay. Well, you did. That deal was done at 5 cents, as I mentioned at the beginning. No warrants. So
Mhm.
great. But it almost doubled your share count again, sort of proving that it's hard to raise capital in this environment. Well, it's not
Mhm.
hard to raise capital, but it's expensive to raise capital maybe in this environment. So, how do you think you're going to be dealing with that going forward? And how I'm thinking beyond 2024? Like, do you bring in a strategic partner on the asset level? Do you divest out of some of the assets? Because I mean, you can't keep doubling the share count here.
Yes, yeah, quite right. Having said that, we're an exploration company, so if you don't raise capital, you don't move forward.
Hmm.
But we are looking at at all the options that you mentioned, but it's really too early to make any statement on that.
Okay, so you're gonna
Nothing's off the table there. So and there is a lot of interest and discussion happening in the background.
okay.
Right.
Yeah, I mean, I suppose you cannot tell me too much about this. I well, there's other things that are in your control. How much money do you have in the treasury right now, by the way?
Around just under 2.5.
Okay, 2.5. If you said 120, if we account for some margin, let's call it 150, 10,000 meters, that's going to be 1.5 million on drilling.
Mm.
Um, but then you have to cover G&E. And so
Yes.
when I look at the G&E, I'm thinking, is there room for savings here? And for example, I'm looking at your office, which is a 40 grand a month for office expenses, almost a third of your G&E. Then I'm looking at some of the, some of the paychecks that are maybe on the higher end when it comes down to companies of this size. So that's what I wanted to talk to you about. Do you think there's room for cutting the G&A that I see on the last financial statement for 2024?
Just to a bit of background on the GNA. I mean, really, 90% of our money goes into Guinea, and the management team in Guinea is part of the operating cost, really, I would say. And we have made some cutbacks there recently on the Canadian side, but our corporate overheads in Canada, um, they're not the majority of our expenses. They're really fairly minor, I would say. And in terms of cutting back, yes, we've cut back a little bit. Can we do more? We keep looking at it, of course.
Okay. Because
Yeah. For example, marketing, we've completely cut out marketing. We've done a lot of marketing and we spent a lot of money on marketing over the previous 12 to 18 months. But we're not looking to do much in that regard this year.
it's always challenging because if a tree falls in the woods and there's nobody here, did it make a sound? I've seen that happen with a couple of companies in West Africa. My personal biggest holding is in West Africa. They recently made a
Mm,
new discovery and nobody cared.
mm.
So that's one thing. But well, you say 90% of the money goes in the ground, but so looking at that last financial statement, um, expenses without drilling were around $520,000 for the 3 months. If I annualize that, that's about not a math professor, but it's about 2 million bucks, something among those lines. And then you say 1.5 million is going to go in the ground, which means that if 90% goes in the ground, you're only going to have to do G&A at like $150,000 for the whole year.
Okay, I don't have that statement in front of me there. It's more than that. It will be around 100 months, I would say. Yes.
Uh, 100, I mean, so if you're doing 10,000 meters of drilling and that's costing you 1.5 million, if that's 90% of all your expenses, then that means that 10% is G&A, which is 150,000 a year, or am I missing something here? And that's not really doable, I don't think.
No, but we do have. Okay, we do have a team in Guinea that we maintain, and they would typically be doing field work,
Hmm.
um, and that's why we keep raising the funding to keep you know utilizing the assets that we have in the country there.
Okay. And when you told me 120 a meter, does that includes the field team then in that drilling, or
Yes, exactly. Yeah,
then the
yeah.
rest is, well, really G&A, so it's the management fees and the office expenses, stuff like that. That's what
The
comes in.
the ex the ex Guinea expenses. Yeah, exactly. Yeah.
Yeah. Okay.
Yeah.
Good. Well, that's the I don't assume anything else is happening at your third project there, or is there?
The third project, I mean, there's a lot of interest from other parties, but ourselves, we've just done a small amount of geophysical work there. We'll be reporting on that soon. Really, just very small to test if the geophysics that we used at Bantabay, if it'll be useful over there. If it's useful, then we can look to expand it in the future.
Right. Okay.
Mm.
Not for 2024, I don't assume though.
No, we're not planning for 2024. Yeah.
Okay. Okay, good. What else is happening in the meantime? You said you're cutting on marketing. Of course, you always want to have some marketing. You're going to
We'll
conferences. I assume you went to Africa last week.
I went to the Indaba. Yeah, that's something we paid. We had a credit for from last year.
Hmm.
It was actually very good. A lot of interest from investors and a number of strategics, quite a large number actually.
Hmm. Okay. So that's sort of giving me hope that maybe 2025 we see a strategic and to on the asset level. Is that how you would want to do a deal? Like if, for example, I make a big reveal and I tell you that I don't know, I'm Mark Bristol's nephew and he sent me to interrogate you so that I can get him in as a strategic. What would you want to hear from me? Like what kind of a deal would you want to give me?
What kind of deal? I mean, our first kind of deal is to have a placement at a significant premium to be able to get enough to for a meaningful chunk of additional drilling. In combination, in combination of a strategic placement, we could talk about a potential asset level joint venture with some cash back and an earn-in structure spent to earn more equity. Obviously, we won't do that on our flagship project, but we could look at one or two of the other projects for that. So that would be the ideal scenario, basically.
Okay. Not on your
Mm.
flagship project, so that's you want to keep 100% of that.
Yes, we want to work that ourselves. Yeah.
Okay. Okay,
Mm.
interesting. Because well, that's been a model that's worked for some of the companies in that region too, where they've gotten in a strategic at the asset level, doing they're doing a joint venture, for example, um,
Mm.
and they spend the money for them to explore and just drill more basically without having to raise capital.
Mm.
Yeah, good. Well, I think I've been through most of the stuff that I wanted to go through here. What am I forgetting to ask you here, Martin?
What are you forgetting to ask? Why West Africa? West Africa is now the biggest gold producing region globally. If you take the full geographic footprint from, let's call it Senegal in the west and Ghana in the east, it's a fair comparison because all the other big gold producing regions like North America, China, Africa do have that sort of geographic surface area. So West Africa is the biggest one by far now. It has also had experienced the fastest growth over the last, call it 10 to 15 years. And certainly in recent years, it's accelerated a lot in Guinea. And the reason for that is twofold. A, the geology is there. Let's call it threefold. The geology is there. A lot of the areas have not been well explored, so they're relatively immature um, exploration wise. And very significantly, not to be underestimated, the red tape is really such that a junior explorer and even bigger companies can work there very efficiently, very fast. We don't have to delay drilling programs for 6, 9, 12 months of permitting that you see in many other jurisdictions. We basically have our paperwork in place. We do it once and we can drill with that at very short notice, basically. The same can be said for building mines. I've been involved in a couple of mine builds now in three different West African countries, and speaking certainly to our more advanced peers in Guinea, also the time frame for permitting is 12 to 18 months on average. Might be longer in some cases with special situations, maybe near a park or something like that. But that is extremely competitive on a global scale, and very important for the junior not to experience those delays due to basically bureaucratic red tape.
Yeah, again, I hope West Africa starts getting a better image soon. But yeah, good. It was good
Yeah,
to meet you. Thank you so much for doing this. And I hope we can chat again once you restart drilling and some results start coming in.
would love to. Yeah, looking forward to it, and thanks a lot for the opportunity.
All right, with that, moving up the market cap and flying over to South America, I have Brian McEwen with me here today to talk about Golden Era Resources, a precious and base metals explorer with multiple assets in Argentina and Chile. Companies listed on the TSX Ventures Exchange under the ticker symbol GRG, where an average of about 40,000 shares trade each day with a 52-week high of 13 cents and a 52-week low of 4 cents. With a market cap of call it 8 million Canadian dollars and 144 million shares outstanding today, this is a 5.5 cent stock. There are 34 million warrants and 11 million options, resulting in 189 million fully diluted shares. As of the last interim financial statement, which is dated September 30th, the company had $2.7 million on the current assets side of the balance sheet and a bit less than $500,000 in the current liabilities side of the balance sheet, mostly in the forms of account payables, and there is no long-term debt. As it always is, though, please go to the company's website as well as setterplus.ca to review the most up-to-date financials, because besides this being an active company, which obviously spends money, Golden Arrow also raised $850,000 at 5 cents with a 10-cent 3-year warrant as part of a larger $1.2 million non-brokered private placement recently. So do pay attention to that. In terms of corporate expenses, if we take out the exploration costs and the share-based compensation, Golden Arrow spent roughly $200,000 on average over that last reported quarter, call it G&A, if you will. Numbers aside, though, I probably have a map on your screen right now, but my fingers tell me that there are 6 projects on that map. Geographically, oh, it's actually 7 projects. Yeah, I should learn how to count better. Geographically, not too far off from each other, but still on 2 sides of a border, specifically the border between Chile and Argentina. Or on the Argentina side of the border, Golden Arrow has 5 projects. They are all copper gold targets, all of which they're either available for JV or optioning, or they are already under an option agreement. So 2 of those are under an option agreement. 3 of those are 100%, the permits on which are 100% owned. So, well, they're basically being explored by other parties, the one that are under option agreements. And I hope we can touch upon them, but they won't be the focus of the discussion here today. Because on the Chilean side of the border, northern Chile to be specific, there are 2 projects. One of them is an early stage copper project with multiple targets on it, but again, that's not going to be the main focus, because San Pietro, that is what Golden Arrow's flagship asset is called, that's where most of the money goes in, and that's also where most of this discussion will be focused on. They currently still own 100% of the mineral rights on the property, which, by the way, covers 185 square kilometers of land. The project lies on the Atacama fault system, which is probably what brought the typical IOCG mineralization from sort of deeper in the earth through the help of breccia veins and mantos in this case. And Golden Arrow is not the first company to drill this asset, so it's being looked at by multiple parties, including Teck and Sumitomo in the past. And then it's got 34,000 meters of historic drill holes on it. Also there's geophysics and stuff like that, and all that has been used by the company to define new drill targets, which they hope they'll be using that data to come out with a mineral resource estimate this year by specifically focusing on the Rincones target, which is an area of 2.6 by 1.6 kilometers that has historically seen 46 drill holes. And now that's also where the company's own drilling has been focused on over the last 2 years, I believe. Well, almost 2 years by now. That's not the only target on this project, though. There are several large-scale targets here, including the Kala target, where Golden Arrow has already completed a phase 1 drill program as well. There is Rodeo, which has also recently been drilled and found near-surface copper oxide mineralization. And then there's the Redis Norte. That's another target with near-surface mineralization showing up in historic drilling, but that one hasn't been followed up on by Golden Arrow themselves. But with an MRE being planned for 2024, I hope Ryan and I can talk about that later on in the conversation. That resource definition or delineation drilling, whatever you want to call it, is expected to be supported by one of the drilling companies in the region, which has recently signed an option agreement with Golden Arrow, whereby the drillers will perform roughly 4 million Canadian dollars worth of drilling over the course of about a year and a half. And they are also required to pay roughly 2.7 million Canadian dollars in cash through 6 payments over the course of 1 year, which, if they complete all of that, that will give the drilling company 25% ownership in the San Pietro project. Historically, by the way, as I mentioned, the project was in the hands of a couple of parties. It was first of all, it started off as a Teck and Jogmag joint venture pre-2007, and then Sumitomo came in 2007, I believe, ish, to then become the sole owner of the permits almost 10 years later. So up until 2022, they were the sole owner of this project, and that's actually where I actually want to kick it off, Brian, because if the project is as good as you hope it to be, why would Sumitomo leave it in 2022?
Wow, you didn't leave me a lot to talk about, Anthony. That's quite an introduction. A lot of things there I'd like to touch on. Specifically to answer that question, Sumitomo actually had a joint venture with Tech back in the day from 2007 up to about 2009 or whatever it was, and then Sumitomo went ahead and continued to do the drilling. They completed their drilling in 2010 or 2012. It was all wrapped up, and then it sat on the shelf till 2022. They never did anything with the project. Uh, they had done evaluations, and for whatever reason, they decided it didn't fit their business model at the time or anymore. They were is expensive to hold that much land each year, and for whatever reason, corporately, Sumitomo decided they were going to get rid of it. And we got a call from a group that was looking after the sale of it, and they said, if you're interested, it's going to go to an auction. They want this off the books by the end of the first quarter, and this was in November of 2022. So we put in a bid because we had money from a previous project, and we got the project. But Sumitomo, as I say, they hadn't looked at it for a long time. That was the immediate question we asked Sumitomo as well when we went in there, and they just said that corporately they want out of this kind of deposit. And when we put the bid in, I totally honestly, I did not think we'd get the project for the bid that we put in at $3.5 million or whatever it was, close to that. Others had bid in higher, but because we had cash, we got the project. So that's how we ended up with it.
Okay, and that's an interesting point in and of itself, and it might seem like a bit of a repetitive question, but your project is also in the middle of two capstone projects and another IOCG project to the north, all of which, well, the two capstone projects are both well advanced, not too far off from production, well, closer to production than you are, we can put it that way. Yet your piece of land remains untouched. And I mean, $3.5 million, or even you right now at an $8 million market cap, it would be less than 1% dilution for Capstone to take you over. So how come haven't they?
That's just an excellent question. I'm really glad you asked that. And it's the company that had put together the sale of this. I said that Sumitomo had been put in charge of looking after the sale. They talking to the owner of that group, he had said that he thought that the deal would just be a matter of brokering it with Capstone. And just to clear up, the Capstone has an operating mine on one side right now, Manto Verde, that's been operating since the 90s. And they've also got on the east side of us a project that's all permitted and ready to go. They're completing the final feasibility of that. So their big project there is to merge the two together. It's called the Manto Verde Integration Plan or whatever. If you look at the Capstone website, a very interesting read if anybody's interested in that. When they went to Capstone and said, "Are you interested in this property in the middle?" They had said, "No, we can't take on anymore right now. We're just not interested." And I was surprised by that as well, and always wondered like what was wrong with this. That Capstone wouldn't be interested. Shortly after we had taken on the project, we saw this press release come out at almost the exact same time that we were doing the deal with Sumitomo. The word came out that Capstone had made a deal merging Manto Verde and Santo Domingo. So they are in the middle of a great big deal. And when I talked to the people at Capstone, they said, they should. This is their words to me. Said, they didn't have time to look at it. They were very focused on their merger that they were doing, and they've said to me on several occasions since then that we should have definitely picked up that property when we had the chance. So that's really the history there. So I think we were very, very fortunate, very lucky at the time that it worked out that way.
Well, but they have a chance right now. I mean, they can just come at you with a not a friendly bid. They can even if they put 100% premium, it's still not a crazy amount of money to them.
I don't want to give away anything here. That we went through a process last year when we ran out of money. The markets are very, very difficult. I mean, it's almost embarrassing when I'm listening to you. We trade between 4 and 8 cents, and we have an $8 million market cap. I mean, for the assets we have and the projects we have, it's just unbelievable. And to do a financing at a nickel, it's and anyways, we went through a process of looking for a partner, and we talked to all of the big companies in the industry. I don't think there was any big secret that we were farming around there. We did have some serious interest, but nothing for the amount of money we were hoping to get. So when we had this opportunity of making this deal with a company that would be investing right into the project, that would have some serious skin in the game without diluting shareholders, it was just too good a deal to pass up. It was just a great deal, and they did serious due diligence before they came in on the project, and they realized that there's a lot of upside here, and believe me when I say that they're not in there just to make money drilling meters. They're looking for the upside of the project when this thing finally does get sold.
Well, that's exactly where I wanted to go, is like when this thing finally gets sold. I suppose a twofold question here, but does it get sold between MRE and a PEA, or do you think it takes longer than that to interest a Capstone or someone else?
That's a question like how long is a piece of string? It's so hard to answer. When we were going through the process and talking to all of the big boys, they were saying, we don't look at anything without a resource estimate on it. And I would talk to them, I would show them what we had and what we believed to be there. And I mean, there was just these, well, we want a resource estimate. And that was, part of the reason we're going to go ahead and do this resource estimate, so people can say, wow, they've got this or and that. And you might see people, jump in at that time. I know that Capstone's always going to be keeping an eye on us. We have a big area of land, as you say, 185 square kilometers. There's another 100 million ton deposit just north of us. I mean, there's other things that could be done with this project than with Capstone. But I've been down this road before, and we saw this on our last project. If you've got existing infrastructure, you don't want to build all these things if you don't have to. If there's a plant and especially in this case, if they have to have a roaster for the cobalt and things, you don't want to take on more costs. So it's interesting. Depending on the line of questions, I can add some more light to that as we go forward.
Well, what do you mean by that in terms of putting more? I mean, to me, it's almost too obvious for it not to be Capstone. I believe, what is it north of you is Sierra Madre?
Sierra, no, Sierra Norte.
Sierra Norte is right.
Is to the north of us, and that's a Chilean consortium that holds that project. 100 million tons is kind of small, and we believe we've got a good sized deposit. I don't really want to talk too much about numbers on that, but what we saw in our drilling and the previous drilling, we believe we're going to have a substantial area. I mean, I know for a fact, talking with the Capstone people, they've shut down all exploration. Their total focus is on the merger. They want to do some drilling and follow up on their feasibility study at Santo Domingo to the east. They've let a lot of people go, and that's the word from Capstone. Whatever else this Capstone's up to, I can't really speak to that, but we're in contact with them from time to time, and I know darn well that they're watching us and what we have. But having said all that, I mean, there's other ways to approach this, but there's no question that Capstone's the obvious person. Right. I mean, you look at the history of that, and I don't know if the original Capstone project, they bought Santo Domingo to the east of us. They paid $700 million from far west in a deal, and that was not that long ago. And their stock is doing very well. The company's doing very, very well, and we're not much more than a decimal point on that at this point.
Yeah, exactly. That's what I was getting at, is that it makes too much sense for it not to be true. I guess everything's possible there, but and so why I'm bringing this up is because you're now potentially getting in another party in the face of that drill company, and they're getting a decent chunk, right, at 25%. So do you think that might, I don't know, potentially scare away Capstone or other acquirers down the road?
No, I think exactly the opposite. I mean, we're talking about a drilling and construction company, a group that we've worked with in the past with great success. like I say, I think that a very important part of it. I mean, we've got a drilling company now that's got serious skin in the game. I mean, they want to see us succeed, is because that's where their big upside is going to be. And I don't know that they're really in the business of trying to take this on or do anything different. It's a very friendly deal. We work closely with them, and I think it's just excellent at a time in the business right now where money is so difficult, so hard to raise money. To make a deal like this and advance a project. We're designing the drill program right now, but we are going to drill it off. We are going to calculate a resource, and that's going to be hopefully by the end of the year, or maybe early next year. But it's moving ahead, and people can see that. So when you look at when would people come in, I don't know. Maybe they'll want to see what the resource number is, or along the way with our drill. Who knows? It could happen at any time. One of the other things that came along is that we talked to a lot of companies during the process of looking for partners, and we signed a lot of CAs. Companies looked at the data, and quite a few of them said, "Hey, we're going to be watching you." So a lot of people out there have got our information. They've got the information of the mines on the other side, and I mean, who knows? Copper's big, cobalt's big. I mean, we've got gold, iron is big. It's a very attractive target.
Mm-hmm. That whole deal was kind of interesting to me because it's 25% sort of asset level dilution, if you want to call it. But at the same time, the 2.7 million Canadian dollars that you're getting in, if someone were to buy that in the open market, they would already get 33% of the company-ish at $8 million. That's what it is. And then on top of that, they're drilling about 4 million Canadian dollars. So it was interesting to me that they're only getting 25%. Like I suppose I would have asked for more if I were putting that much money in there. So I suppose I agree with you there. Let's then talk about what they're going to be drilling this year. How many meters are you planning for with that?
Prior to the deal, like the deal that we made with them is that we had to show what our plan was. We had to lay out the plan. Here's our exploration plan. This is what we plan to do. This is how much drilling we're going to do. We're going to need to do geophysics in this area, and they bought into the whole plan. And so, I mean, all I can really talk about is like the budget we submitted to them. What we actually end up doing, we'll see. But I mean, right now we're looking at I don't know, 10, 11,000 meters, somewhere in that neighborhood. We need to drill it off to at least in inferred and in a lot of places indicated categories for the 43-101. But the thing is about the history here, and I think one of the things that we did that was correct is you mentioned the Rincones target, and the Rincones target is the main target. There's no question about that. And Sumitomo drilled that, and Sumitomo did calculate a resource. They didn't have the interpretation right, so their numbers, what they see and what we saw is completely different in most cases. But with the project being so big, I mean, that only represents like 20% of the project area. So we went and drilled other targets. We looked specifically at to the south, Koya, which has excellent cobalt numbers. We were getting 600, 700 ppms of cobalt in bigger wide zones. We can trace that, we believe, like 4 kilometers to the north. So that represents a huge target. And we found out that we had some actually good gold numbers in there. We had good copper numbers. So that represents a great target. The other thing is that with not only the Manto Verde and the other projects around there is they're kind of starving for oxide copper ore. And so we wanted to drill off our near surface oxide, which is why we drilled at Rodeo, we drilled at Mariposa, we drilled those other targets so we could prove that we had near surface copper oxides. And if we didn't sell that ore to Manto Verde for their leach pads, well, we can sell it to a bunch of other mills or plants in the area. I mean, there's a lot of opportunities there for us once we prove this up to do other things. So we were very successful in all of that drilling. We drilled the Rincones and we proved that our interpretation was correct. We drilled to the south in Koya. We proved that we had high cobalt numbers. We drilled in the other areas and we proved that we had a lot of near copper oxide. And so it was a huge success. but everybody's still focused on what is a resource at Rincones. Well, we will do that, but I'm hoping that we're going to make that resource a whole lot bigger by adding the resources that we're going to be able to add in from these other areas.
Okay, but so the first MRE that you're hoping to have by this year, that's strictly Rincones, and thank you for correcting me. It's Koya. I call it Kala, but it's Koya because I get it. But so you're thinking, what is that going to include, Rincones and Koya, or how do you see it?
No, I don't know right now. Right now, all I can say for sure is that we're going to drill off Rincones, but Rincones is open to in all directions, north, south, east, west, into in a depth. And if you look at our targets, like Koya is only 2 kilometers to the south. I mean, if we could tie those together, we have another target that we plan to drill called Mattis, and Mattis is a very interesting project. Lot more similarities to what that Capstone sees at Santo Domingo, and that's only 1 kilometer away. So when you've got a resource estimate, and you can actually stretch your resource out to include stuff that's 1 kilometer or 2 kilometers apart, it can make a huge difference in the numbers you're calculating. So we'll see as we go. But I mean, part of our deal with our new partner is that we do take this drilling and calculate a resource. So that is on the books, and that will happen. But I'm hoping we can add these other areas. And you talk also about this Radis Norte. It's a huge deposit that it just looks like where we're drilling at Rincones, it's just gotten deep, but there's never been deep holes drilled into it to prove that everything we have there continues to the north. It just gets deeper. So I mean, I get very excited when I start talking about the other targets around there. It's a significant deposit.
So, but do you want to go to Radis Norte this year as well?
Well, I'm hoping we will. I mean, we've got we've got a deal right now that's there, and we'll drill off what we have to do. We'll calculate the resource, we'll do that. But when you've got a partner that's got serious skin in the games, you say, hey, look, if we go up here, we drill this, we could make a huge difference. We could double the size of the resource by drilling this stuff to the north. I mean, you can kind of do those things, but that's getting ahead of ourselves. I mean, right now, I like to just talk about what the budget we have and what we hope to do, and hopefully, within the next week or two, we'll put out before the PDAC, we'll be putting out a press release explaining exactly what our plans are and what we plan to do, and we're actively working on that today as we speak. Is this what this drill program will look like and what we plan to accomplish?
You did mention that the stuff that Sumitomo was coming up was completely different numbers than what you're coming up with. How come? What does that mean?
No, that's not what I said.
No.
I mean, we were dealing with the same drill holes. So they had different ideas on the way that the mineralization was dipping, and on how much of these things were on these vertical structures. And what we found is that it was actually dripping the other directions. So when they drilled their holes a certain way, they don't get a proper intersection of the ore. So we went back and we drilled holes the other way. We got really good thickness. If you look on the website, we've got intersections of 64 or 80 meters of the thick magnetite bands, which was never interpreted by Sumitomo. And that's what adds the tonnage, is to show that you've got the permeability and the porosity and the space for these magnetite mantos and stuff, which carries all the ore. And that was a huge success for us when we could show that. And now we want to extend that to other parts of the property. So we feel very, very positive about being able to do that.
Okay. But so essentially it was sort of a geological decision that made the difference between what you're drilling and what Sumitomo was doing.
Well, it's a geological interpretation. And one of the things, I find it's kind of like a geology 101 that companies like to go in and drill without ever really spending the amount of time they should on surface. And so we spent a lot of time on surface. We found zones that had never been mapped, had never been sampled, and that all went into our interpretation. And when we did that, we went back and we went and relogged a lot of the core. I mean, typically these big companies, they get the most junior person to log the core. And that's what everything else is built on. And so we went through, we found interpretations. We've got a top-notch team. We've got an incredibly smart technical group there that picked up on these differences. And when we put together the new interpretation, we said, okay, now let's go drill and test it. And we did, and we were successful.
Well, so then looking at what Sumitomo defined and what you're hoping to define. You just told me that you don't necessarily want to guide any numbers, but let's just maybe put it that way. What do you think the market wants to see here? It's an IOCG target, so size will matter. Grade obviously always matters, but what do you think that moves the needle here?
The thing is that there's a lot of a lot of IOCG projects in Chile. The whole Atacama Fault system from north to south. You find these IOCG things, and what they are is a lot of them are just dominated by these very steep veins, and the steep veins are very good. I mean, there's a lot of mines. I've looked at a lot of mines in Chile. As a matter of fact, as Golden Arrow, we looked at a couple, and we had a deal on one not too far from here. What you need to do is to be able to prove that you've got these thick mantos, and that's what makes a big difference. And then that gets you up into the hundreds of millions of tons. And I'm sure that's what we're going to be seeing. I mean, we've got just the north of us on a project size. I mean, a quarter the size of ours. They've announced 100 million tons of resource. You've got 500 million tons of resource on the east of us at Santo Domingo. You got 500 million tons on the west of us at Mantoverde. So our project sits in the middle of a 1.1 billion tons of resources and reserves, a 43,101 resources and reserves. We sit right in the middle of that. And we see the geology from the east very similar to what we have. We see it similar to what we see in the north. It is different when you get to Mantoverde, but for what we see on our project. And then to the south, there's an iron mine. I mean, we can't discount the iron. Iron makes up about 30 or 35% of the value. So it's we're surrounded by mines.
Yeah. When you say similar, by the way, in what way? What are we talking about? Is it a geophysical footprint? Are we talking about the breccias that you're seeing, or what are we talking about?
Yeah, you just as you go, just the rocks change, and you don't see the same type of as you go further to the west, the geology just changes a little bit, and it becomes a little bit different. I mean, it's a big oxide heap leach deposit that they have there. That's not what they're looking at Santo Domingo. I mean, more kind of a traditional type deposits.
Okay. Are you planning any metallurgical work?
Oh yes,
This
yes,
like
definitely.
okay.
One of the benefits I have to say, Antonio, I'm sorry for interrupting you,
No
but
problem.
one of the real benefits that we have is that we've got an operating mine on the west of us, which is things are different, but on the east of us, Santo Domingo, where they've done the feasibility of the project, and we can go through there. We use all of their costs, all of their recoveries, all of their assumptions, and they're very valid. Anybody that if I'm questioned says, "Well, how did you get to come up with that? How do you come up with that?" So we can do that, and that's allowed us to like evaluate our project on an NPV, a net present value basis, as opposed to just looking at one of the metals. And so we're getting all the contributions, and they say, "Well, you don't know what the recovery is going to be." I go, "Well, yeah, we kind of do because we're using the same recovery set that Santo Domingo had." So the numbers that we haven't put any of these numbers out. They're all for internal combustions. They're all very valid, very, very strong because we got the project, right next to us. It's, a lot of benefits of being where we are, other than just a great infrastructure, just the information.
Where I'm coming from with that metallurgical thought that I was thinking about there is because it's copper and oxides, right? So it shouldn't be, I mean, it's nothing new on this planet. But you're coming up with a whole lot more cobalt than you had initially expected. Do you think that's going to complicate anything with the metallurgy?
Well, if you look at what Santo Domingo has done, they originally did their study, their feasibility study, and it didn't fly. I mean, after investing all that money, and so they went back and said, I mean, cobalt went on a screaming tear value wise, and they went back and said we got to look at how we recover the cobalt because they have 250 ppm or something in their resource numbers, and so they've been studying that, and they've had some very clever ideas. I think the one that I was the most familiar with is that the cobalt is mostly associated with the pyrite, and so you've got to break the pyrite to get the very similar to when you've got refractory gold. When you've got the cobalt is tied up in the in that. So what they were looking at was roasting it So they put it in a roaster and they take the pyrite and they separate the cobalt, and then they take the pyrite and they make sulfuric acid. And with the sulfuric acid, they use that on the leach pads at Manto Verde on their oxide, which is really, really smart. I mean, if you look at in their feasibility study, the cobalt or the sulfuric acid went from like $27 a ton to $130 a ton or something. And so all of a sudden they were producing their own sulfuric acid and they were going on. So, and you were getting rid of the pyrite, so it wasn't a problem in the dumps, and they were recovering the cobalt. I mean, it was just a great process. And so, I go, well, okay, well, we've got all the numbers, so let's just assume that for our cobalt. And you know what? Hey, we've got some really good screaming cobalt. So, let's do it. And you've got the mining minister coming out and saying, we're going to make, I mean, already Chile is one of the best lithium places to get lithium, and let's make cobalt the same. And so there's this real attraction to the cobalt. But I know that, they've got some very smart people at Capstone, and they're looking at other ways of recovering the cobalt. The cobalt makes a significant difference. And again, I just touched on it a little bit, but the whole idea of using, the NPV, so you have all the value that you can in the rock when you do the evaluation, makes a big difference. The cobalt, iron, gold.
Sure. It's all Kazatomprom's fault with the sulfuric acid shortage there for that price spike. But it's a good point. No, it's what's the end product, by the way, of that mine next to you? What are they selling?
What's that? Sorry?
The end product, what are they selling?
What are they selling? I mean, I'm not quite sure I understand.
In terms of a concentrate,
Oh, it's as far as I know, it's a concentrate. I honestly don't know. I assume it would be in a concentrate. It goes through the roaster and recovered. I'm not really sure what it comes out is in the end.
But so a copper concentrate, essentially.
Well, yeah, a copper concentrate for sure, but they separate the cobalt before that or after that. So the cobalt and copper are on two separate streams, right?
Yep.
So you've got the cobalt goes with the iron. It probably still is some. Yeah, it's a good question. I don't know what. I have to think it's a concentrate though.
Why I'm asking that is because I'm just thinking about way too early, probably, but still thinking about margin, as in, I mean, how much money could potentially something, this is a forward-looking statement type of thing. What do you have any idea of their OPEX numbers?
I don't have them off the top of my head. There's some really good information on the Capstone website, especially from last year. If you go on to some of the stuff that they looked at under their technical reports, there's some good things there, and one of they're going to be take trucking or whatever they're planning on doing, but they've got to transport this stuff 35 kilometers from Santo Domingo to Manto Verde where the plant's going to be and all of those things. And my comment has always been, if your big focus is on OPEX and this is where we can cut costs here and costs here, I mean, anything you find at Santo Domingo is half the distance. You're looking at a lot less trucking distance and all that kind of stuff. And I said, if we can prove higher grade, lower strip ratio and less of a haul distance, I mean, we don't really have to have a huge standalone mine. It just needs to be better than Santo Domingo, right?
Right. Yeah. Or in that range in and of itself too, because the capex is already expected to be lower. And of course you want to have ore that can be that can go through the circuits that you described there, because that's where the majority of the capex would be. And that would lower the OPEX, I suppose. Okay, fair enough. I believe that with the deal that you have with the drillers right now, I assume you won't have to raise capital anytime soon to complete that 10 to 11,000 meter program.
No, that's paid for. That's like money in the bank, taken care of. That's the deal. So it's and those drills. Well, we will probably end up with a couple of drills. We're waiting for them to be delivered, and hopefully they'll be there within the next month or so.
Okay, a couple of drills. Is that like a couple? I mean, two, or do you think more than two?
Well, the plan is we're going to start with one, but I don't think we're going to be able to meet our targets with one drill. So we will likely we've talked to the drilling company already, and they're agreement with that.
Right. Okay. How's the weather there right now? Is it I suppose when are you able to start? Basically, that's what I'm asking.
Oh, well, it's the weather. I mean, the problem is it just gets too darn hot.
Hmm.
It's in the desert there, and it's the middle of summer right now,
Yeah.
so it gets pretty warm. There's absolutely we're at I think it's at like 1,000 meter elevation. We're not high. We're you know everything there is quite pleasant to work. Don't have to worry about trees. It's kind of like the moon. It's it couldn't be better from an infrastructure point of view and everything around. And all of the stuff has been built there for the other mines. And I think a smart company will take advantage of the existing infrastructure. And then, of course, your op costs and capital costs are a fraction, right?
Right. I also saw a picture of where the city is 8 kilometers away from you. I don't assume there's cattle grazing or anything else going on that the locals might not want you to disturb.
No, there's nothing like that. We're just there's that little town Diego del Magro that's eight kilometers away. It's really there supporting the mining business.
Hmm.
Bunch of motels and restaurants, and it's I don't think you'd want to take your family there for a vacation. It's just kind of out in the middle of the desert. But it's good. It's sufficient. I mean, you look at all these other places, not all these other places, but a lot of places where you're looking at working at the top of the Andes and fighting weather, and so expensive to get everything in. I mean, our drilling costs are cheap. We have everything is right there. We can drive into town and have lunch and come back. I mean,
Hmm.
it's that close, right? 8 kilometers, and we have a big core shed facility that we've just rebuilt in Diego del Margo, so everything is set up there. It's quite nice.
Yeah. With the way the market has been going, I'm not taking my family anywhere to vacation, so I suppose there would be nice, but hope the market's gonna have to change for that. Your last financial statement though, talking about the market and about money, it showed over $1 million, I believe, in investments. That's how it was written down, which I assume is partly coming from the option agreements you have in Argentina or something along those lines. What is
Oh, I don't know. I can't. I don't know for sure. I couldn't say. I kind of stay out of that part of it.
Oh, okay.
But
I was just wondering what you want to do with it because I mean, is there a plan for monetization? Are you going to be able to use it to cover G&A or
well, we've
potentially?
got. I mean, I mean, really, the reason we did a small raise before Christmas of
Mhm.
I don't know 700,000 or whatever, and now we've just. I mean, I think we're looking at doing 1.22 or something. You mentioned it. I mean, that's we closed on 800, and that is just to take care of our you know operating budgets and overhead and but also pays for our exploration that we have going on in Argentina, which is minimal but has huge upside to it.
Yeah.
Uh,
I understand you stay mostly on the exploration side of things, and that's what you care about, the geology. But you're mentioning the overhead there, as I mentioned at the beginning, it's about $200,000 a month. Not cheap, on a year basis, 2.5 million bucks. It's not a low sum of money, especially at this market cap. Is there any plans to lower that, or are you targeting the
oh
same thing?
yeah, well those are old numbers.
Hmm.
I mean we've got cut way back. We've given up a lot of things. We've basically closed our office down to just a kind of a skeleton size, and a lot of the things that we were carrying and paying for we don't anymore.
Okay.
We've cut our overheads back a lot. I know that the plan is that we're in good shape now, at least into the summer. We won't have to worry about that anymore.
Hmm.
We do have deals on the other projects. I don't know if you want to talk about those at some
Sure.
point, but we're the company. I think has done a really good job considering I mean, it would have just killed the company if we had gone out and raised money in the equity market to do what we're doing. It would have just like ridiculous amount of shares and stuff we would have had to issue if we could even raise some money.
Mm.
Nickel is like seed financing with a company with a history with all these great projects, and the project we have in Chile is just mind-boggling to me to have it be in this position. But it's nice to know that we're not alone.
It's well, I don't know how nice it is, but here aren't a lot of companies are struggling with that, and that's where I'm picking that up, the thing with the G&A, because I mean, if you have to keep raising money here at 5 cents, the share count is not going to get any lower, right? And if the G&A would have stayed, now you're telling me that it's lower, so that's a good thing. Hopefully we'll see on the next financial statements how much lower. But if the G&A stays in sort of the $2.5–3 million range, that's already quite a lot of dilution just to keep the
No,
lights on. So
you know, that is, it's just not. I mean, I don't know what it will be, but I look forward to seeing that next statement as well, because it's just, everything's just been slashed to the bone.
it's
Um,
true. Yeah. Let's
and
let's do talk about what you have going on in Argentina. You still have a 100% interest in 3 of the 5 properties, if I'm not mistaken. But you're not moving in on them.
I'm not sure which 5 projects exactly that you're talking about. We've got we've been working in Argentina since 1993 and logged history, and back in those days, there was we picked up a lot of property. I mean, we have 180,000 hectares of property in
Hmm.
Argentina, a lot of it in very attractive areas. I think probably the one that we're getting the most notice on right now is our Magote project,
Yeah, for
which
sure.
we optioned that to a company called Syndicate out of Australia. They've since become Magote Metals. They've raised $10 million in these difficult markets. They're a private company. They hope to go public in the very near future. That project is immediately south of Filo del Sol. The big project that Filo Mining is working on. I mean, it's like probably one of the biggest deposits ever in the world by the time they're said and done with that. It's we have the exact same geology comes on it. They'll be drilling that property. We're getting a lot of attention with that. We have another project called Caballos, which is in oh man, I believe it's also in San Juan province. It is it is a project that we've joint venture with a company called Hanak, and they haven't been able to get their permits until this year. So they're working on that project.
Hmm.
We had another project called Wachi, which we had a joint venture with a company called Libero. That does not look like it's going forward, but the people from that will be repackaged as something else. I can't really say much more than that. The one that I'm really excited about is we've got a project called Puerto Rios,
Yep.
which is next to Barracks, Valadero, and Pascualama mines. They're like about 8 kilometers between the two. It's an area that we've had for a long time. We've had different people come in and do a lot of work on it. We had some people from the university do some work on it, and we've for very little money and deals with a group in there. We've got a group working on Puerto Rios. Very, very excited about that because we've had offers in the past for Puerto Rios, and something very big could come out of Puerto Rios. Something very big could come out of Magote. And the other project that we've been working on in San Juan is called Yanso. Again, this is very, very inexpensive work that we're currently doing and ahead of building up drill target stuff. And we did some sampling in there, and we were just blown away with the results we have. And we're still working at and compiling it. We'll be putting out information on that. So all of our projects in Argentina, any one of them could be a company maker. And
Hmm.
we've got companies working on them. We're doing some work on them, and it's costing us very little money to get that done. So there's a lot of action going there. I mean, it seems that this new government in Argentina is kind of like woken the companies up, and people are looking to invest in Argentina. And we're happy with that. So we've got that. We got our, we don't talk about that much because we want people to know that we're focusing on our project in Chile. But
Yeah.
any one of these could be like I say, a company maker. And when I think back that we've got an $8 million market cap, I have to shake my head at
Yeah.
that we're really in that position. I
Well,
can't believe.
what I can see here on the Argentina side on the website is again 5 projects. That's Caballos, Don Bosco, Mogote, and Puerto Rios, Yanso. That's what I can see on here, and 2 out of those are already under an option well, Mogote is under an option agreement. Caballos is under an option agreement. Yeah. What's the
And Watchy is officially is still under agreement, but that's we're redoing that deal right now.
Hmm.
Don Bosco is we've just signed a CA on it with another company. But again, we've got this incredible interest in our projects. Like I say, it's all of these big land packages. Like I say, 180,000 hectares in Argentina that have not had a lot of attention. All of a sudden, people are interested, and they, like I said, what Filo has found, and what NGX is finding in their drilling it's incredible. I mean, just kilometer thick packages of mineralization. I mean, it's deep, but it runs for a long ways, and people are excited. I mean, it's one of the few areas right now in the mining business that is getting a lot of attention, and it's good, and we got property all around it, so it's great.
what's the upside for you in that deal with Mogoti? How does that work?
Oh, it's I mean, I think it's a very, very good deal because we were looking for someone to do work on it, and people just kind of sap. It's funny because I get questioned on this all the time, and that the property's been there for, I don't know, 20 some odd years, and no, maybe not that long. A while we've had it, and Valley did a little bit of work and things, and we kind of shopped it around, and then Syndicate came and they were interested, and we made a deal with them, and after we signed the deal, all of a sudden everybody came and we'll pay way more for that than you did with Syndicate. But the deal with Syndicate is good. We're happy with it. They're good. They're good partners right now. The deal there is they invest $5 million in the project, and there's some payments. I'm not sure what they were. We've collected those in shares to date, so we're big shareholders in that company, and also then they have 80% of the project. They gain another 5% by completing a feasibility study, which is a big expense up there to complete a feasibility study, and then we have a 15% carry, or we are 15% owners, and we can sell that or do what we want. But anything they find, I mean, it will be a significant. I mean, if they're going to drill, I believe here in the coming months. I mean, if they hit something, you watch that will go crazy, and I think that you'll see a lot of activity around that stock. So we basically have a free carry at 20%. And whatever happens, I'm sure they'll sell before the feasibility study. But
It's a free carried up until the feasibility study then.
Yeah.
Okay.
And then they have to do the feasibility study, which would be, I don't know, be 20, 30, $50 million to do that. I don't know, be a lot to do that feasibility study, because it'll require a lot of drilling. It's up high. Maybe it won't cost that much. That's a little extreme, but it'll be an expensive feasibility study to prove it up, and how that ties in with what they're doing at Filo will be key. But we've got to carry it, and anytime we can get other people spending money on our projects where we get upside is a good thing for us.
Yeah. Yeah, of course, if they find something. I'm also thinking about if the market is actually going to care about that. I mean, imagine that, all the power to them, I suppose, but if they find the next Filo, is the market going to give you value for that? That's what I'm thinking about.
Well, I don't know. I would think so, because if you can go in there and I don't know what Mogote's stock will be trading at, but I mean, right now, if you look at Filo, they're what, $18-20 a share, and if somebody can show that the one that's trading at a nickel has got some continuity, I think you're going to see that thing move. I mean, you saw that the exact same thing happen with in the lithium business, right? All these projects go crazy for the property around. I mean, and there's there's lots of examples when things go, staking rushes go crazy for the properties around them. So I would expect that you'll see quite a bit of movement on it.
Thank you, Brian, for stopping by. It was a good conversation. Thank you so much.
Yeah, my pleasure, Antonio. Anytime.
All right, on to the north then, and way up to the north actually, all the way into the Northwestern Territories, close to a small city called Yellowknife. I am talking to Gerald Paneton, the CEO of Gold Terra Resource Corp, which trades on the TSX Ventures Exchange under the ticker symbol YGT. I'm not doing a full company overview. I've interviewed Gerald many times in the past, but the gist of it is that this is a currently, Gerald would not like to hear this, but it's currently a $12.5 million gold exploration company that controls almost 1,000 square kilometers of land, about 10 kilometers away from that old mining city, Yellowknife, that I mentioned. City was actually originally built because of the presence of the Campbell Shear in and of itself, from which approximately 14 million ounces of gold were produced historically out of multiple mines there, which shouldn't surprise you really because considering that this is on it lies on a 70-kilometer strike length greenstone belt, so it's rather large, which is also where Gold Terra is currently testing the extension of mineralization below the depths of the historic underground Con mine, which is really deep, so below 2,000 meters deep. But as far as I understand it, Gerald, there's been some sort of a mistake of sorts, if you will, while drilling there that had you basically abandoning the first deep hole, and you're now starting a second one. What exactly is happening there?
Well, thank you, Antonio, for your time and for having me and for question and answer session. It's always great to be able to speak and be able to answer the question. You know, we disclosed last week that we were abandoning hole 55 due to some operational mistake done by our drill contractor. That happened. It happened last summer. One operator made a mistake, and to correct the mistake, Foraco had to work on the hole for 1 month, and at their own cost, right?
Okay, so it's not costing you any more money.
Well, no. When the operator makes a mistake, like it did last summer, like it just did about 2 weeks ago, they are responsible for that mistake. Like we're responsible for, you know, what happened in the hole. Sometimes, like the geology is different. We cannot blame everybody, but we have a very, very good contractor with Foraco. Foraco is a honest, a good upfront relationship. We've been drilling before I came to this company in 2019. We've been drilling with Foraco. So what happened basically is that when they were setting up a wedge to do another cut into the Campbell Shear close to our successful hole 55 main, they did not set the wedge properly, and the wedge stayed on the rods. And when they pulled the rod, they stuck the wedge at a depth which was quite high, which means like we would have to set up a wedge above that to get a hole and get it done. And of course, I mean, it goes both ways. Do you invest time and money doing it from the Foraco perspective at their cost, or you just start a new hole and you get a credit from the problem we had in hole 55? And for me, hole 55 was great. It showed a Campbell Shear. We had almost 13 grams over almost 2 meters, which is cutoff grade at that depth, which is about GT of 20, 6 over 3, say 6 grams over 3 meters. You know, near surface, our cutoff grade is maybe 3 grams over 3 meters. So a GT of 9, 10. Well, at depth, you have to account for the depth and the location, which is maybe 20, say 6 over 3, 7 over 3, something like that. And that's what 13 is. 13 will be in an ore block. So we were successful. And we were trying to wedge. But because we're just 200 meters below the mine, we have a very short window to increase the number of ounces to be found. So by changing the hole and our strategy, which was planned, the hole we're doing now was planned 3 months ago. We just moved the rig. We said, okay, let's forget about that hole. It's giving us too much problem to both Foraco and us. We're looking at a small window. Let's look at the bigger window. Let's go 600 meters below the shaft and then wedge up with about 10 to 20 wedge and explore a larger area that could generate a potential of 1 million ounces. That's the reason why we decided to go for the next hole and settle with Foraco the damage done in hole 55. So there will be some credit, some discussion, negotiation. I know already they were upfront. They made the mistake and recognize it. So we've gone through that last summer when we lost the hole for a month, and Foraco paid for everything for a month to get back where we were.
Right.
So they're a good company, and in reality, we were spending too much time trying to fix this hole. So we started a new one, better prepare. We backed it up, and it's ongoing now. We started drilling this week, and we set up the new platform. We moved the rig, and I think a few days ago we were like already at 100 meters. So we should expect to go to the Campbell share over the next couple of months.
Okay, and that's one other point, because you mentioned, you invest.
I'm sorry for the long answer.
Well, it's a good answer, because you have to give me, you have to give me background that you typically cannot put in a news release. That's why I appreciate these longer conversations. There's no time limit, so we can talk for as long as you want. But you're putting, there's no time limit on this conversation, but there is a time limit to what you have to your option agreement, basically. So you said you're investing time and money. How much time does it take to deep that drill? Because and you told me last time that you were in the process of negotiating an extension to the Newmont option agreement. But is a time delay here going to be an issue?
No. First of all, we discuss with Newmont the challenge of the market. I mean, I'm sure every one of your auditors, everyone that is listening or listener to your podcast and to the different story knows how bad the market is currently for the gold producer, the gold developer, the gold explorer. It's not pretty out there. And, we cannot advance the project at the same rhythm that you have plenty full of cash. Otherwise, I would have, more program going on, more drilling going on, especially outside of the Coal Mine as well. The Coal Mine has a deal for 4 years. It terminates in 2025. There's enough time to decide what I want to do with it. But I didn't want to wait. So I discussed before Christmas with Newmont to extend the deal by 2 years. We cannot extend like by 4 years. We go 2 years at a time. And depending on the result over the next 2 years, but we will get this extension announced eventually. It's just a matter of the legal paperwork that goes through this. You have to realize, like, I can put the amendment all together in a week, but it may take Newmont 3 months to review it. Even, I'm not at the top of the pile in the Newmont legal department.
I definitely one of my
will be a good news. Once done, we'll put it out.
Yeah, one of my biggest holdings has a partnership with Newmont, and they can be very bureaucratic and kind of slow to do. Not slow, but much slower than what the juniors can typically get around.
I spent 18 months negotiating this deal. First, there was a deal announced in September 2020. And soon after, I decided to go back to the table and said, this is not going to work. I need more. And because of the property, the way it was looking, and we got it. Newmont is a very good partner, negotiator, but you have to be patient.
Yeah, sure. How does pricing work? I don't think you and I have talked about this per meter of drilling, because you're over 2 kilometers below the surface where it bottoms out, but that you start already at like 1900, so your holes are only like 600-700 meters. Is it? I mean, I assume it's a little bit more expensive than drilling at surface.
Surface.
But yeah. So
holes start at surface.
Oh, okay.
We don't have access on the ground.
Okay.
So everything has to be done from surface.
So how much
going underground will take us 3 to 5 months to dewater the mine. And then you'll have to spend millions of dollars. I'm not sure how much, but say $1 million just to drift and get a platform to drill. Eventually, we will have to do that. But you need to demonstrate the potential from surface before you spend, say, millions of dollars going on the ground. So you want to prove it up from surface. So a hole like this costs about $1 to $1.5 million. I think our hole 55 cost us less than $1 million. And you start the drilling costs near surface is like, say, $80 a meter. And then by the time you get to a depth is about 500. So the average is roughly, say, $300 a meter. And so you can do about, a hole for about $1 million. And that master, after that, gets wedges. And the window we'll be looking at is much bigger. It's a window that is somewhere like 600-700 meters vertical by 200 meters right below the shaft in the core of the deposit.
Right. And that's so $300 a meter, even for the deeper stuff.
As an average, from
Okay.
$80 a meter you have at surface to the 500 meters you have at 2,000 meters.
Right. Okay.
So,
how much money are you left with again now?
Currently, we have about $1 million, but currently we're also negotiating with with Foraco about the negotiation on the credit to receive for the next hole.
Okay. So you're gonna have enough money to finish this.
We can drill, we can carry on with our drilling. Yes, are we gonna have to raise money eventually? Of course, we always have to raise money as a junior. The last time we raised money was May last year. So it's been almost a year. Unfortunately, the market is not on our side to raise money. Ideally will be to have a big hit in May, June, have the result out and then raise money. But sometimes you have to raise it before. So market is market. You have to live with it. But we're very conscientious about dilution, about the value of the asset. But when you said our market cap is like $12-15 million US, or even probably 15 Canadian and 10 US, with 1.8 million ounces, that brings your valuation at less than $10 an ounce, or less, almost like $6 an ounce. Where can you find a prospect, a project, which controls so much ground on the Campbell Shale, produces 14 million ounces of high-grade nature, with power, with 20,000 people, with infrastructures, for $6 an ounce?
Well, do you think part of that has something to do with the fact that being around Yellowknife, because Yellowknife has that history with arsenic and whatever it was? I mean, the community was not too happy with it. Does it have something to do with that?
I think a lot of people are struggling and the valuation are down. The problem with valuation is that there's no buyer. It's all algorithm selling, shareholders that are tired. I mean, I met with one person before Christmas, and I wish I would have been able to talk with the person, with the shareholders a bit differently, but he had been in the story for 10 years. So way before I came. But I only came 4 years ago. And I think I've done a lot of very good work in 4 years. But his view is that he's been there for 10 years. And then the market is tough. So you have to choose the right project, the right management, and invest in what you think will work eventually. And in a market like this, when it's very difficult to find support and buying, it's difficult. Even look at Barrick. I mean, the producer are discounted 20% below the gold price, based on gold price and their cash cost. Why is that? If the gold producer are 20% discount, what do you think the juniors are? They're 90% discounted to the gold price. Right? Because we're not producing, we don't have any cash, we have a risk of dilution, we have a risk of not performing, not developing, and the risk tolerance is gone.
Yeah. And I'll tell you what's happening in Turkey isn't helping anybody either. I don't know if everybody's feeling that, but SSR is definitely feeling it. I was just looking at some of the charts as you're speaking, so it's bad. But okay, no, you're.
You know why? Turkey is a big buyer of gold.
Yeah, but no, I mean, sure, but I mean,
so when you have a lot of gold on your country, Would you let somebody else produce it, sell it, make money out of it? Or would you rather, there's always a risk. That's why being in Canada, you eliminate a lot of geopolitical risk.
Yeah. Yeah, no, I see that part. When do you think this whole is going to be done? You said in a couple of months, but when are you targeting your next assays, before or after you have to raise capital?
Oh, look, I cannot answer the question, because you could be raising money a month from now, 4 months from now. It's all about timing, interest, making sure the company has enough cash, you know. So it's always a balance between those two, limiting dilution. Look, I'm a person with 6.7 million share at an average of 26 cents, and the stock is not even 5 cents. So I'm very conscientious about what I do as the principal and a shareholder of the company.
Your wife must be happy with that average cost of capital. I know mine would.
We don't talk about this too much.
That's a good strategy. I should employ that strategy as well. But do you think there's going to be flow through money available for you once you want to raise?
I am going away from flow through for
How
the
come?
time being. Why does Canadian invest in project elsewhere than Canada, which are risky, without flow through, putting their own hard cash? And then when a Canadian project, which is no political risk, and I'm not going to invest unless I have flow through. So the flow through perspective is about a tax shelter. They don't buy it because they believe in your project. They don't care about your project. And that's a feeling from a lot of different funds that do strictly flow through for their clients and for their fund. And I built Detour Gold without flow through from the get-go. And I've never been a fan of flow through. I've lost money personally as an investor in flow through because the guy didn't do the work. I do the work. And then you still get slammed. People selling 10 million share, open market, algorithm, stuff like that. No. This is something that I'm stopping now. If I do some flow through, it has to be with a solid back end. But the traditional flow through is very difficult in Canada. And the retail flow through is even worse in some instances. There are some good people, don't get me wrong. There are some good people. But I think if you want to survive in this market, you've got to survive with hard cash.
But it's going to be more challenging finding that hard cash in this market.
So what? I prefer to have less shareholder, but solid one.
You got to find them, though. I mean, I suppose everybody does, but you have to find them.
Yeah, all the people outside of Canada. They
Where
don't do flow through outside of Canada. Any investor from outside of Canada doesn't need flow through, doesn't use flow through. So why should you just give an advantage to Canadian investor with flow through and then they slam the stock? Why would you do that?
Yeah.
The platform of investing is worldwide, while giving an edge to Canadian who basically don't care about their company.
It's true. Yeah. Okay. Good point. So what you're putting a bit more effort on Europe as a jurisdiction of attracting investors,
Yes.
or okay.
Yeah. My best conference in 2023 was Manuel Bali in Zurich.
Yeah, the SMI. Yeah, we met there. Yeah.
There's no question in my mind, this was my best outing of the year.
Did you see anything happen? I can take a look at your chart, but did you see any volume increases or something in your I mean, I'm just wondering if you're having success in
I was
attracting
there.
those.
Well, you have to realize that when we were doing the conference, the gold price shot up to 21.75 on the Thursday. So we did have a pop to 10 cents with buyers. But since that 21.75 gold over the weekend, it has dried up quite a lot. And with gold now below 2,000, you could see the market. You know, when people ask me, Antonio, why is the producer discounted at 20%? If people believe gold price goes, say, to higher number without predicting it, they should buy it because it will become a premium. But if they're discounted, it's because some people are either pushing the gold price down on purpose without naming any conspiracy theory about gold price. Gold price is manipulated. Okay. I read enough to be aware that it's probably happening. But until they change or until there's a big breakthrough in the gold price, which could still happen anytime soon or later, I don't predict gold price. I adapt to the market and I do my best to find gold as much as I can. But if the resource sector producing company are 20% to 30% discounted, it means they don't believe the gold price is going to change tomorrow.
And
they were taken by surprise in November, and I think it showed because it screwed up to 21.75.
Yeah, it's been trading in that tight range of sort of 1950 to 2050, if you will, give or take. Still up quite a lot on about an 18 months basis, give or take, from 1650 to where it's at right now.
That's correct. Yeah.
You last time we spoke, you mentioned the potential for lithium there too, by the way, in your land package, and you said that you were being approached or talking to different parties to potentially option that the lithium potential out.
We did announce that last year in June. We announced a deal with Midas Corporation from Australia, who roughly started to work on the property during the summer and did about $600,000 worth of work. This is disclosed, so we did a press release on that.
I saw that part.
They find some very, very big pegmatite, up to 4% lithium in some area. They have been able to narrow down the large area they were exploring. We did not, and we only farm out the critical minerals of lithium, rare earths, and others. No cobalt, all the cobalt, the base metal potential of our project was kept under YGT. And they've done some work. We've been looking at their report. We filed a report, and they're planning their 2024 season. But then the lithium price collapsed. That's the reason why I option it.
Yeah.
Because, lithium is an industrial minerals. Yes, you want to find the reason why Australia and a lot of the company wants to have a source of lithium and not depend on China, which is maybe 5 years ahead of us for batteries and stuff like that, an electric car. So they're trying, but at the same time, it's a tough place to invest because it's industrial minerals in general it's a control market. Whatever it's graphite, whatever it's.
But what I was referring to is some of the land that you still have. That last time we spoke, you told me you think there's more potential beyond what was announced last year. Is anything else happening in terms of strategic deals or whatever, or are you really only focused on those deep holes this year?
No, we are a company focusing on gold. We have other assets that we don't want to neglect. We're not going to let them go. Currently, in the current budget frame that we have in 23-24, we're focusing on the Campbell share. The goal is to find 2 million ounces on the Con Mine option. We've already found 540,000 ounces near surface. We probably can grow it bigger, maybe up to about 1 million ounces. But to make a project viable for Gold Terra at the Con Mine, we need 2 million ounces. And then we can incorporate the 600,000 ounces left in the mine at 12 gram gold. That will give us a 2.5 million ounces project. Why is the threshold 2 million ounces? Well, you always want to have some back pocket. So that's why I'm saying the ounces in reserve, I'm using this as back pocket. How much would it cost to build a 2,000 ton per day mill in Yellowknife? So it's kind of like, it starts like this. How do you want to build a project? How much would it cost? How many ounces do you need to support the depreciation of investing so much in capital? And I came up with 2 million ounces for $200 an ounce. I said, maybe my project is going to cost me $400 million. Don't forget, the Con Mine has an intrinsic value of more than $200 million US. The coal mine has already a mining lease, a surface rights. It's 98% reclaimed, but the whole site can be reused. It's not vegetated. It's an industrial site. It's got power, warehouse, a shaft to 1900 meters, a water treatment plant that you will need to build if you dewater the mine. There's so many advantages on the coal mine option that for a lot of people, it's not calculated in our valuation of the company. But the moment we find 2 million ounces, those savings of $200 million are real. So my project, instead of costing me, say, $500-600 million, could cost me $300-400 million. There's huge saving. I mean, not just in capital. How long do you think it takes to go down to 1900 meters vertical? How much do you think it takes to sink a shaft down there?
Yeah.
3 years.
Oh,
2
wow.
years to sink and 1 year to service it. So you're saving 2 to 3 years. You're saving permitting process on a brand new place by using the coal mine, which is already what we call a brownfield project with a surface lease and a mining lease.
But the question remains, like, are the locals going to let you build a big mine and a water treatment plant and all that? What's that?
It's not a big mine. The footprint is already the same. You're not changing the footprint. The only thing that we have as a backup plan when negotiating with the town, would you like us to put the mill back in town, or would you let us build it 20 kilometers north of town, near where we have 4 satellite deposits? So the coal mine will be eventually mine again, under my time or under the time of somebody else. There is so much potential in Yellowknife that with unlimited budget, we will deliver a lot more ounces to be mined.
Right. Good. Well, Gerald, thank you. I appreciate your time, and thank you for sitting down with me.
My pleasure. Thank you, Antonio, and thank you very much for everyone listening.
All right, staying in Canada, but just a couple of 100 kilometers to the south, I believe. Next up is Azimut Exploration, a multi-commodity project generator and explorer with assets in Quebec. Companies listed on the TSX Ventures Exchange under the ticker symbol AZM, where an average of 40,000 shares trade each day, with a 52-week high of $1.50 and a 52-week low of 65 cents. With a market cap of 64 million Canadian dollars and 85 million shares outstanding, today this is a 75-cent stock. That number of the shares outstanding, by the way, that's notable here because those 85 millions, that's basically it. I mean, that's not the result of multiple rollbacks over the years, as it often is in this industry. This is the number of shares outstanding after 37 years of operations. So this company is literally be operating long before I was a sparkle in my father's eyes. And it has 85 million shares outstanding. So that's notable. Only about a quarter of the company is in the hands of retail investors. That's also notable, as institutions and high net worth individuals own 1/3. Specifically, Quebec-based institutions own 22% more of that. Agnico Eagle owns 12%, and insiders own 5% of those shares. As of the last interim financial statement, which is dated November 30th, the company had about $13.5 million in current assets, most of which was cash, so specifically $11.7 million, which came from a bought deal financing that they closed at the end of September last year, and that included some flow through in there as well. And then the rest of the current assets is about $1.5 million in account receivables, as well as a small portion of prepaid expenses is on there as well. On the current liabilities side of the balance sheet, there were $3 million in account payables, about $1.5 million in committed exploration, and again, a small portion of a lease liability, but there's no long-term debt or no significant long-term debt as far as I understand it. But of course, you want to go to setterplus.ca yourself, because by the time you're listening to this, the financial situation will have changed. This is an active company that spends money. They also actually have a little bit of revenue coming in as well. For those 3 months, Azimut spent $1.3 million on G&A, which results in about $450,000 a month on G&A on average over that quarter specifically. Boring stuff and numbers to the side, though. This is quite a unique company. There's a lot of things going on at any given moment, provided that they have 16,545 claims spread across 31 properties and covering 8,000 square kilometers of land in Quebec. And I think that makes it, I believe this is the largest exploration portfolio that I've ever heard about. It's definitely the largest exploration portfolio in Quebec, and it covers multiple different metals, focuses on 4 metals, though, that be gold, copper, lithium, and nickel, again, all of which in Quebec. Now, obviously, one company managing all of those assets and all that ground is not an easy feat, and it's well, it exposes investors to significant risk typically. How Azimut manages that risk is by signing options and JV deals with major operators in the province, some big names that you might recognize too. So, for example, out of those 31 properties, there are 6 JVs and 1 option agreement with SOQUEM. That's the investment arm of the Quebec government. There are 2 option agreements with Rio Tinto. There's 1 option agreement with KGHM and 1 option agreement with Mont Royal and Alfire Gold too. This basically means that only about half of the over 8,000 square kilometer portfolio is 100% operated by Azimut. The main focus within that 100% owned portfolio is located in the James Bay area. Most of the stuff is located in the James Bay area, actually. And this is a gold project. It's called the Elmer Gold Project, on which Azimut recently published an initial MRE showing an indicated resource of 311,000 ounces and an inferred resource of 514,000 ounces, both right under 2 grams per ton of gold. And the majority, so about 75% of the resource, is mineable in an open pit setting with a 0.5 gram of gold cutoff grade, with an added bulk underground mining potential, as you can probably see on your screen right now. This resource came from only one of the zones on this land package, so Azimut believes that there is more upside potential here, given that this is an orogenic style deposit and those rarely occur in isolation, so there could be more. And the idea here is to find multiple of those open pit to underground deposits along the shear zones that are located directly on strike or parallel to this to the shear zone where this deposit is located on. So that's basically what the company expects will be the focus of their self-financed drill program for 2024. And what else they're spending money on this year is lithium exploration. As a matter of fact, about 1/3 of the overall portfolio of the company is focused on lithium. It's spread across 5 large properties, one of which that be 150,000 hectare lithium in pegmatites target is again in the James Bay area, of course. That is 100% owned and operated by Azimut, and that might also see some drilling in 2024, but Jacques and I will have to talk about this. Overall, there's a lot going on, so I'll spare everybody's eardrums here. But in conclusion, 33% focused on lithium, 23% focused on nickel, 21% focused on gold and copper, 14% is gold only, and 6% is copper only. Jean-Marc, now on to you, I suppose. I think I just called you Jacques, but I mean, that's a good name too. So, and I'm sorry if you've already covered this well in other interviews or presentations, but I'd like to better understand the overall idea, if you will, behind this strategy, given that this is somewhat unique, especially given the size. So yeah, talk to me about that. Why go for that many projects and that many options agreements at the same time if you already have something on your hands that could grow well beyond the 1 million ounce mark, and then maybe sell that and move on to the next venture or asset? Like, why is all this happening at the same time?
First, I have to say that you made a very, very good summary about our activities. Maybe the most critical point, exploration business by itself is extremely risky. And you have to, if you want to run and terminate your long run, you have to de-risk your activities and find the right edges against risk. One edge we see against risk is having a multi-commodity approach at the scale of a region that we know very well, of course, Quebec. We try to first maximize the location of our targets at the scale of the province, driven by the technical analysis of numerical data. And this is our core expertise, trying to find the very, very best targets at the scale of Quebec by exploiting the right way the existing numerical database. This edge provides us the ability to attract good partners and develop this target through exploration work. Again, having good properties, it's not enough. You have to reduce as much as possible the share dilution rate through time. If you issue too many shares through time, you are diluting your shareholders, and at the end of the day, the value per share will be very, very low, and you will be unable to create a value per share because you have too many outstanding shares. This is the way we work. We try to generate the best target as possible, option those properties to good partners, and at the same time, this is reducing our financial needs. This is a very short summary of our business model.
Right. Maybe it's worth sort of, because I said you have a lot of properties. Maybe it's worth sort of talking sort of on a chronological map, if you will, starting by now in February. What's happening here at Azimut first, and how does that fit within the strategy that you just told me about?
The strategy essentially for the year 2024, as before, we have the ability to concurrently operate a large number of projects, which is which essentially will lead the company to the potential of making new discoveries or to further advance already recognized excellent project like Galine. Galine is one example of the project we will advance this year. We have announced in January a very good drill result, 2.48% LE2O over 72.7 meter is the first drill hole we announced on the property. And of course, we will further advance with Socrem as our partner to the next drilling steps. In the meantime, we will concurrently advance the Elmer property to expand, to further validate excellent drill target, which hopefully will increase the resource base already known on the project. We will concurrently advance other lithium potential properties which have never been explored. And by concurrently advancing several properties, we are maximizing, of course, the discovery chances. We are reducing the risk. We are putting the light over our overall activities.
And forgive me for staying sort of on the topic of strategy here, because I want to talk about all these things that you mentioned there, but I'm hearing a lot of lithium focus work is going to be happening in 2024, basically. And it makes sense. I mean, your portfolio is about a third in lithium. But at the same time, I'm sort of looking at the chart of the lithium price as we speak, as well as the supply-demand numbers for 2024. And I can't help but wonder, again, strategically, why do you think it's worth focusing on lithium right now? Do you think there's appetite for new lithium discoveries in the market?
This is a very good question. If we are reasoning over a very short-term period, of course, the lithium price dropped, but we can't read the newspaper every morning and direct our activities according to the lithium price. This is not a way to develop a strategy. We are long runners. We believe in the project, in the fundamental value of the project we have developed. We have signed a $114 million option agreement with Rio Tinto. Rio Tinto is thinking the same way as us. They are long runners. They are ready for the long run. They know that we are facing a fundamental need for new lithium discoveries in stable geopolitical environment. And again, we believe that Quebec has an incredible world-class potential to offer for the North American economy. We have good lithium projects, and we will advance them up to the discovery stage. There is no way to stop our lithium exploration effort because the lithium price dropped, because we know that there is a fundamental need for world-class deposits in North America, and we are part of that game. Anything else?
Yeah. What do you have by now? 10 million bucks left in the treasury?
Yes. Yeah.
Okay.
And we will receive also funds from our partners to advance project. We are expecting at least $3 million from Rio Tinto to advance 2 key lithium projects, Corvette and Canaya. We will receive funds from Soquem to advance the Galilee lithium project. For additional drilling, we will partly fund this program as well. We have the ability to attract more funds from new partners as well. You know, it's an ongoing business. That way, again, one key side of our business is to concurrently advance several projects, and each year expose the company to a discovery scenario.
Right. Okay. How much of that 10 million bucks that you have of your own money, how much of that is going towards lithium, and what's the rest? What's the split for the rest?
Yeah, on our own, we will spend $5 million this year for lithium exploration directly funded by Azimut. And we will fund $1 million to further advance Elmer. When we are talking about a total of $6 million, it's really a minimum. We may find additional funds from new partners as well.
Okay, but so minimum of $6 million bucks, and then the rest that you have in treasury of your own money is going to be used on, I assume, well, G&A. So what are you, are you budgeting about $4 million bucks in G&A this year?
No, much less, because a part of the G&A is paid by option payment or yearly option payment from our partners. We are also receiving management fee from the project we operate on behalf of our partners. We operate on behalf of Soquem on 5 projects, on behalf of KGHM on 1 project, Kukamas. We are also operating on behalf of Rio Tinto on 2 projects.
Right.
And this is providing enough cash to cover a large part of our G&A expenditures.
Okay, good. Yeah, good point. The $5 million bucks that you're spending of your own money on lithium, and I do want to move to Elmer at a later point, but I'm thinking about that money being spent on lithium, and I suppose a two-folded question here. Do you think that would be enough money to drill JBL this year? And if you do you have the drill targets ready?
Yes. Again, JBL1 is an outstanding target, still at a very early stage. But when we put this target at the scale of the James Bay region, it's really an outstanding target in terms of size, strength, component. It has the largest and strongest lithium footprint, including the Pathfinder elements, for really a world-class target. Now, a key step remains to be validated. We must go on the field and start sampling this large project. It's a 50 52 by 28 kilometer project, never sampled for lithium, never. And we already know more than 100 outcropping pegmatites, having like a very strong lithium footprint in lake bottom sediments. All the components are present. Now we have to start from the beginning, validating the target on the field. And to the best of our understanding, we can move very quickly from the prospecting stage to the drilling stage. On this, hopefully, this will be done by the end of the year.
When does the prospecting stage start there?
In June.
In June.
Yeah, in
okay.
June. Yeah.
How long do you think that's going to take?
I would say a minimum of 1 month, considering the size of the project. We already know, the field work is already planned. We know exactly what we have to do. We must do a lot of prospecting, sampling, but the targets are really ranked the right way, not only based on what is already known in terms of outcropping pegmatite, but this has been further validated by the analysis of satellite imagery. We have well correlated again with the lake bottom sediment footprint. We have a good understanding of the regional context. Anyway, all the targets have been properly ranked. It can take 1 month before having good targets. Again, the number of projects we operate, that we are concurrently operating, we have to rank, the way we work. We will work with Soquem. We are working with Rio Tinto. We are working with KGHM and also on our own project. We have to manage all these programs at the same time, but we have enough people to quickly advance as soon as it is possible.
Right. Okay. As you mentioned, large project though, 1,500.
52 by 28 kilometers.
So yeah,
it's a region.
Okay, yeah. So it's 150,000 square. No, 150. You wish 150,000 hectares. That is, so it's big. Okay. Where on that, because it's big, I'm thinking where in that package exactly are you going to be drilling? Is that, and I'm looking at the map over here and I'm seeing the geochemistry, sort of the purple spots on the geochemistry.
Yes.
Is that where you're going first?
Yes. Yeah. We don't worry. It's really I would say our expertise. We are spending most of our time to define and rank the targets. Okay. When we are studying a field program, it's like a military operation. We are very, very systematic, very efficient, well organized. We know the logistical aspects of operating in the region very, very well. We have fully functional people, a good team, and we are very efficient in the way we are, assessing the targets.
Okay.
It can go very, very quickly.
Okay, good. Who owns the ground around you and sort of between the GBL 2, 3, 7? Who owns all that?
Yeah, several companies. Smaller blocks, but yes. Now the James Bay region is really extensively staked. Again, Azimut has the largest land position at the scale of the James Bay, not only for lithium, but for several commodities, including copper, gold, and nickel. Saying that, everybody has a right to make a discovery. In fact, we learned a lot from the other companies, and all the results obtained by other companies are helping us to refine our targeting as well. It's a good competition is good by itself, but based on our exploration history in the James Bay region, the way we understand the database, the way we understand the past exploration work, which has been done at the scale of the James Bay region, provide us a real edge against risk.
Okay. Would you, if you find something there, this year with your efforts, would you be willing or looking to pick up some of the ground to sort of consolidate the land package?
There is the way we approach exploration. It's very, very rare when we have acquired more ground from through option agreement. Almost exclusively, we have acquired by ourselves claims. We never bought claims from another company. We try to arrive first in a play. We develop many times our own play, and most of the time we have seen companies arriving following our staking phase made by Azimut. The way we stake, it's driven by our own assessment work. It's not driven by closology. It's really we are arriving first most of the time.
Good point. We've seen a whole lot of that happening around Corvette last year. A lot of closology type of thing. It was kind of funny at times even. But you make a good point, or at least I'm sort of thinking about something there, because I wrote down June, July. What's that reminding me of last year was it's sort of an unfortunate situation was the wildfires. Are you accounting for the risk of wildfires? Because I know it caught a lot of you guys up there last year by surprise.
Yeah.
So is there a risk mitigation strategy in place this year?
Yeah, it's a good point. This has been a very painful phase from an environmental standpoint, a true disaster. This year it's paradoxical, but the fires which occurred is limiting the risk for having the same extensive fires, because a lot of the ground has already been burnt. And in some ways, it's limiting the risk on a large part of our properties. It's paradoxical, but this will helping us to accelerate exploration, because we will see we will have more access to prospective ground which was covered by forest. But it's unfortunate, but in some ways this will help us.
Right. Yeah. Well, it's I don't find it paradoxical. It makes sense to me that it's happening that way. But okay, June, July, you say it's going to take about a month. How quickly do you turn around to, like, if you have the drill targets and you actually want to go and drill it, how quickly can you have the drills on site and turning?
We already have 2 drills ready to drill. One on the Galine property, the other one on the Elmer property. We will try to manage the best way we can the prospecting side with the drilling side. And we have enough big team to concurrently manage a drill program with prospecting programs.
How's that work going to be split, by the way? Because you're making good point that you're managing it between prospecting, because you have to keep coming up with more land, right? Because that's a core portion of your business, prospecting. So how do you manage prospecting versus exploration?
It's directly related to the advancement of a project. Like Elmer is really at the drilling stage. We have many good drilling targets to be validated, to be further validated or expanded. And this is an independent program, that we can manage with its own dynamics. But on the other side, to advance other lithium projects, which are much less advanced, we have to do serious or extensive prospecting programs to reach the drill stage. We have to balance our operational dynamics. It's something that we have already done many times.
Okay. Right. Okay.
Yeah. It's not really an issue.
You do have something that's more advanced to work on this here. That's Elmer. You've mentioned Elmer a couple of times. It's a gold property. That's the gold property you mentioned at the beginning with the recent MRE on it. And that's also something that I wrote down that we have to talk about here because and give me some rope here, but you spent $28 million on Elmer so far. If that's what you're for people listening, by the way, there's also a very good sort of Azimut by the numbers type of short presentation that shows this. That's where I'm getting this from. So 28 million bucks you've spent on Elmer so far, which is, by the way, as much as you've spent on your other 100% funded projects. So this basically half of your spend from 2003 to 2023. So in 20 years, half of your spend has gone on this project. And you've defined about 800,000 ounces. If we round that up to about 1 million to take it easy on my brain here, that says that you've paid over $28 per discovered ounce of gold. Probably higher, actually, when you go to the actual numbers. But, I mean, over 28, right? But so that $28 million includes other work, too. It's not only the drilling, among which targeting geophysics, geochemics, and so on and so forth.
Yes.
So I suppose the question here about that project, that I'm wondering about is, do you think you'll be able to get the cost per discovered ounce of gold with the exploration you have planned this year? Do you think you can get it lower than $28 per ounce?
Yeah, this is a very good question. In fact, we started this project in 2018 from a very, very early stage. And we have, as you mentioned, we have acquired extensive property scale quality data, not only drilling expenditures. Now we have a quality data which is covering the entire Elmer project. This, as you mentioned, this is including airborne geophysics, IP or ground geophysics, extensive prospecting, a quality data covering the entire project. Saying that, for us, it's the next step is to discover additional ounces in the vicinity of what is already known, and we are talking about a shallow depth target starting from surface down to 200 or 300 meters. And of course, we anticipate discovering those additional ounces at a lower discovery cost per ounce. This is a plan. We already advanced a number of quality targets which only need to be further drilled in at least on 3 to 4 targets. They are just like ready for additional drilling, and potentially we can convert this prospect into really potential resource target for systematic drilling.
Okay. Where are those targets relative to the pit? Is it sort of west, southwest, or east, northeast? Because you have, yeah, go ahead.
We have like three main target zones. One which is just like a long strike on the eastern side of the Patron deposit.
Yeah.
The other one is just west from the Patron deposit. The last one is a 10-kilometer long target located about 2 kilometers north of the Patron zone.
Okay.
All these targets are very well defined. It's just like a matter of putting additional holes. Again, the the discovery of the Patron deposit is a classical case. You start finding a first zone, and by better understanding the geology on the properties geology, by better understanding the controls, you start finding additional zones. This would be a very classical exploration history. Now, the challenge is to go in an efficient way. The relatively high discovery cost per ounce has been mostly driven by the deep drilling we did in 2023. The grade may have been different. This may explain the relatively high discovery cost per ounce, but at the end of the day, this will be mitigated by the discovery of additional shallow depths new zones.
Okay. And in those new zones, if I look at because I'm looking at a longitudinal view of them that's looking northwest, and so I'm looking to the left,
Yes.
which is west southwest.
Yeah.
There's quite a bit of grade variability there. So we go from 1.7 grams per ton all the way up to 12.7 grams per ton. Do you think that's going to be a thing or an issue? And how do you think you're going to manage grade variability?
No, this is, in the grade, when we are talking about grades related to grab sample, you can find very high grade. Now, it's not necessarily representing the average grade, but at least it's a good sign that there is a strong gold-bearing system along strike. And this is definitively providing you additional drill targets. And in our view, this surface high-grade target have not been properly assessed by end of drilling. It's clearly a drill target by itself. A high-grade sample is not representative of the average grade, but high grade by itself means that you have a strong gold-bearing system.
Okay.
And you have to just like further advance it by doing additional drilling.
Okay. So it's not grade variability in grab samples is not necessarily grade variability in drill core. That's what you're saying.
You can, of course, when you have a drill intercept, it's a composite grade, you may have like a high grade in between lower grade samples. The grade variability for the Patron system is very good. There is no extremely high grade. Most of the time, the grade variability is fairly good. Sometimes we have high grade, but the grade distribution is very uniform. There is no high peak and nothing in between. It's continuous mineralization with a normal grade variability.
Right.
The
Okay.
the nugget effect is very limited.
Yeah. Okay, fair enough. What else I know I'm kind of jumping around here. My technical understanding is very limited, but I'm looking at sort of the shape of the open pit, the outline that you have on here, and I can't help but think about strip ratio. And I know this is an MRE stage asset, so no official mention of strip ratio, but you can start gaining an idea of what this is going to be look like. So, what's your good feeling telling you about strip ratio and dilution here?
Okay, what we can tell you, this has not been mentioned on. I don't want to commit myself, but we are talking about robust resources. About 75% of the resource is potentially an open pitable resource. 75% of the resource which have been defined with a MRA are open pitable, and about 50% of the resource falls in the indicated category, which is good. Saying that, the pit and the the stripping ratio can be optimized by additional drilling along strike, and it's a very early stage resource definition. Starting mineralization start from surface down to 376 meter. It's a good starting point. What is really critical to see along this longitudinal drilling conducted so far is not limiting the shape of the open pit. It's open along strike. Most of the holes at the outside boundary are still mineralized, which means that it's open along strike.
Mm-hmm. Okay, so yeah, I guess you cannot really get any more specific in terms of dilution, but
yeah, it's too early. Dilution, the open pit shape has been optimized according to the cutoff grade and all the other parameters
okay.
to deliver a credible resource.
Probably still too early to talk about this too, but why I'm asking this in the first place is because I'm thinking a little bit ahead and thinking about what the margin might be overall on this once it gets into production. Any idea, I mean, if something comparable around in Quebec or something like that as to what operating expenses might be here on a per ton basis?
No, I would say it's too early. The plan for us is definitively to find other open pitable resource along strike to optimize the overall economic figure of the project. Maybe one example is an underground mine operating by Agnico Eagle in the Val-d'Or area. And this example is very robust in the way we are defining the resource at Elmer.
Okay. So, but essentially you're thinking multiple open pits, and then one central processing facility, central mill, or whatever it might be. Because I think you ran a gravity. What did you have 97% recoveries? You did a gravity test, and
the average recovery combining cyanide leaching and gravity is 94%, but we are talking about preliminary metallurgic test. Probably this can be optimized. The recovery percentage ranges from 27 up to 37% of gold recovery through gravity, which is very good. And the remaining part recoverable through conventional cyanide leaching. Again, this can be optimized. We are talking about preliminary tests, but this is putting the project in a very on the safe side.
Right. How many of those pits do you personally want to have there before you move to the PEA stage?
Again, I have to stay prudent, but from what we already know, we foresee 3 to 4 zones, which eventually may be converted into zones with resources. There are some magic numbers that everybody can understand. Again, as a CEO, I'm very prudent in making expectations, which can be taken as a given for people. I want to stay very, very prudent. Of course, there are some magic numbers. We see this project as having a multi-million ounces potential, but this remains to be proven, which is not yet the case. But according to the size of the project, which is a 35-kilometer long project with numerous already known high-grade gold showings, numerous existing targets with limited drilling, this would be comparable to a case known with many cases known in Abitibi. Additional exploration normally will lead to additional resources.
Mm-hmm. Do you want to do an MRE on each one of those potentially 4 or 5 pits, whatever that you find here, or do you want to start moving towards a PEA and then do an updated PEA? How do you see that?
The idea would be to do an updated mineral resource estimate by taking in consideration all the surrounding discoveries.
Okay. When do you think that's happening?
Again, this is a business which is driven by results, sir. And, depending the results in 1 to 2 years from now.
Okay, 1 to 2 years.
Yeah, because we are considering like shallow depths exploration, shallow depth targets.
Right. Okay. So how much money are you putting into this again? Is that basically the other half of the 10 million, or like how much money you're putting into this
No,
year?
yeah, again, we are very conservative in the way we are announcing our budget. Most of the time, we have been able to expand what we were announcing as a budget. The very minimum expenditure amount for this year will be $1 million dedicated to Elmer, but this may significantly increase.
Okay, and those are shallow holes, so I don't expect this infrastructure too. I don't expect they're too expensive. What is it, 300-ish a meter?
Yes, more or less, yeah.
Okay, good. That gives me an idea of when do you think the works are gonna start?
At the spring.
Spring. Okay, so that's
spring, yeah.
April-ish?
Yeah, April, yeah.
Okay, good. And then assay results 6 to 8 weeks turnaround. Is that reasonable?
As far as we know, yes. We're not controlling the labs, but yeah, probably 8 weeks on the conservative side. But
okay.
Again, it's a classical advanced exploration project. Many things can happen. We are learning each time we do an exploration program on the project. The targets, we are considering these targets as very solid, very, very good. Now it's really a drill project, anything else, because all the basic database has already been acquired, like ground geophysics, prospecting. We may do additional prospecting, but in fact, we have all the data well integrated. what we need at current time, much more drilling.
Okay. Okay. Right, but that's fair enough. April is when you want to start working on Elmer. June is when you want to start working on JBL. But in the meantime, you have 16 more holes coming from James Bay again specifically, but that's from the
Galilee, yeah.
Soquem right? So
Yeah, from
that's 16,
Galilee.
right? I'm not mistaken.
Yes, 16.
Okay.
Yeah, from the Galilee project.
From the Galilee, exactly. I was lost the word.
Yes.
When do you think that's going to be coming in?
Very soon.
Okay.
Very soon, yeah.
Is that sort of a packaged approach to releasing those, or are it going to be hole by hole?
You know, because not hole by hole, because very, very clearly, you know, we already announced the first hole. We already announced that 11 to 12 additional holes were mineralized with comparable mineralization. We already indicated the observed core lengths containing spodumene pegmatite. There is no mystery that we are expecting good results from Galilee based on visual observation, and saying that we will announce these holes at the same time.
Okay.
Maybe 1 or 2 press releases, but this would be the logical way to go to the next step. Which means an additional drill program.
And is that also happening in 2024?
Yeah, of course, yes. Yeah.
Okay,
yeah,
good.
yes.
Well, that's again funded by Soquem.
50% funded by Soquem and 50% by Azimut.
Okay.
And we operate the project on behalf of the joint venture.
Okay. But then to get everything done, what are you expecting, a capital raise sometime come spring or summer?
Again, this will be driven by the results, driven by the market. Coming back to our financial strategy, we hate diluting, the capital structure. We are very prudent in the way we do it. And if we need more money, this will be done at the right time to avoid as much as possible an excessive share dilution rate.
Okay. But Quebec, so you probably have the potential for more flow through, I believe, what is it, 60% premium, something crazy like that?
Yeah, the last capital raise we did was through a charity flow through.
Yeah.
We had a premium of 93%.
Yeah, I saw that. Yeah, that's right. That's the one that you did last September.
Yeah, for lithium, and if I remember correctly, 72% premium for gold.
Okay, fair enough. You mentioned at the beginning that you cannot build your strategy on what's on the front page in the newspaper. And I obviously can respect that because you're approaching this from a longer term type of view. You do have some uranium exposure in your portfolio, if I'm not mistaken. Not a lot, but a few percent. Any plans, given the state of the uranium market, to move on those projects?
Again, it's a very good question. Azimut has been a leader in uranium exploration in Quebec. This led the company to make many discoveries across the province. We have had a strategic agreement with Rio Tinto for uranium exploration covering 1/3 of Quebec. 15 years ago, we have had many other option agreements with many other companies at the scale of Quebec. As you know, uranium exploration has been stopped, related to the Fukushima disaster. Saying that, we are well aware that uranium is coming back. We may do a move at proper time, but we are very prudent. We don't want to disperse ourselves too much. We are very focused on the best assets we are developing at current time. Yeah, we will act responsibly.
Okay.
I can tell you more at this point of time. Of course, we have acquired a wide and in-depth expertise about the uranium potential in Quebec. At current time, we are observing the development, of course, on a Canadian scale. It's very exciting. It's good to see the revival of uranium business. We are not ready yet to make that move.
Jean, I feel like you have a bunch of stuff in your head that you want to tell me, but you cannot tell me because you know some people are going to be pissed off. But no, good point. I understand and I appreciate the approach there.
Yeah.
I think I've gone through most of the stuff. I did want to ask you about insider ownership over here because I understand that this is again a low dilution approach to exploration and all that. But there's been recent buying in the open market in I believe in 2024. If I look at the SETI, some of the insiders have been buying in the open market. I was wondering whether you're planning on I mean, is this an effort to increase that insider ownership above 5%, or do you have a target, or like why is this buying happening?
No, not really. You know, it's a decision which has been taken by the insiders themselves. There is no policy. Of course, you know, a director should be a shareholder to align the interest with the interest of all shareholders. Myself, I own more than 2.2 million shares in Azimut. I never sold one share in 20 years. I keeping the shares for, you know, the big event, the big day. But you know,
what is that? What's the big day? Now you're making me curious here. I have to know what the big day is.
There are not only one possibility, but several possibilities. You know, making a huge discovery that we expect. It can occur at Elmer. It can occur at JBL1. It can occur on the project we have in option agreement with Rio Tinto, Corvette and Canaya. You know, we are exposing or putting the company in light over several projects. This can be a big day, but not only related to one factor, but several possibilities. Okay. Some companies can be interested by the huge portfolio we have in nickel. Nickel is not the flavor of the day, but fundamentally, we have probably the largest nickel exploration portfolio in Eastern Canada with extremely well-designed targets. And at the end of the day, this will pay off. We are really convinced that we have a quality asset in nickel. You know, many factors, not only one factor.
Okay, fair enough.
And we're working for the big day.
All right, last but not least, for this week, a true miracle, something that's not supposed to be happening in the junior space, a stock whose chart does not go from upper left to lower right, but rather the other way around. With that being Founders Metals, a gold exploration development company with an asset that's focusing on the Guyana Shield in Suriname. Companies listed on TSX Ventures Exchange under the ticker symbol FDR, just like the guy who indirectly ended the gold standard in the 30s, unfortunately. Founders trades about 150 to 200,000 shares a day on average, with a 52-week high of about $1.87 and a 52-week low about 24 cents. So it's been quite the ride here. And with a market cap of just over 82, we can call it 82.5 million Canadian dollars and 59 million shares outstanding. Today, this is a $1.40 stock. There are roughly 13 million warrants in 2 batches, all of which, by the way, in the money, decently in the money too. Again, another thing we're not used to seeing in this space. Definitely not if it's in my portfolio, unfortunately. 25% of the shares are held by insiders and 35% is held by institutions, by the way. And as of the interim financial statement, which is dated November 30th, the company had about $6 million in current assets, most of which in cash, which sat at around $5.8 million. And that came from a financing that they closed in November last year, which was done at 80 cents. And then on the current liabilities side of the balance sheet, there's around $1.5 million, and there's obviously no long-term debt on there either. Founders is currently drilling, though, and keeping a roof above their head and hopefully some heating in the office space. That does cost money. So the financial situation will have changed by the time people are listening to this. So you want to go to setterplus.ca to see the latest financial statements. And for founders specifically, that number of keeping the lights on comes up to an average of about $150,000 to $160,000 a month. Numbers aside, the flagship asset here is called the Antino, which is in Suriname, right on the border with French Guiana. So that'd be on the eastern border of Suriname. And the asset is just, well, again, called Antino. So it's just one letter away from having the best name in the world. And it compromises 20,000 hectares or 200 square kilometers, that would be. The geological thesis here is kind of cool because it goes back to over 100 million years ago, to the time when Africa and South America split, which tore apart a rather large greenstone belt with on the West African shield. It now houses something like 300 million ounces of gold or something among those lines, depending on how you want to define it. And there's also multi-million ounce gold deposits are no rarity over in like Ivory Coast, Mali, Ghana, and so on and so forth. So now on the Guyana side of the story, though, so the Guyana Shield, there have only been about 100 million ounces of gold defined there over the last 2 or so decades, despite it holding a larger portion of the greenstone belt, mostly because of political tensions and whatnot over the last, again, couple of decades. That's not been necessarily welcoming to exploration, but it now seems to have improved, specifically in Suriname as well. And Founders now holds the most advanced gold exploration project in the country, but not the only one. And as you might know, there are also 2 operational mines in Suriname. There's a 13.7 million ounce gold deposit that's being mined by the Chinese, and a 7 million ounce gold deposit is currently being mined by Newmont. Antino is an orogenic gold system that's seen some artisanal gold production historically, and it's also seen over 30,000 meters of drilling historically, again, up until about 15-ish years ago. And Founders has now compiled all that drilling into their own database. And they've also drilled 10,000 meters themselves last year, which has returned multiple 100-gram meter holes from multiple targets across the project, and essentially proving their thesis here, which is also why they've just started a new drill program that will, what's going to utilize the company's 2 own drill rigs, which is an important note, but it will also go up to 30,000 meters of drilling in 2024, where actually some of the drill results have already come back from that program. And I'm talking specifically about the Froyo zone, and including 26 meters of 5.5 grams per ton of gold has come back from there, with mineralization starting at surface pretty much most recently. And the expectation to have news every 2 to 3 weeks over the coming months is also something that I find notable. And that's particularly because the availability of a lab pretty much on site, if you will. They can turn around assays in just a couple of days as opposed to a couple of weeks, or your typical 6 to 8 weeks turnaround period. But more importantly, having the ability to have a consistent news flow is what this drives. This setup has also helped the company guide its drill positions, essentially telling them what zones to focus on, where it's typically you wait 6 or 8 weeks to figure out what's really happening. Here is happening in a couple of days. Now, Founders is not the full owner of this project, though. It is under option, and the way things are going, they'll be able to get over that 50% ownership by mid-2024. Of course, contingent on work commitments that I probably have on your screen right now for the people listening, with the option to go up to a 75% ownership. But I've heard that option agreement is open for negotiations, so hopefully you could touch upon that later on in the conversation. Especially considering, again, those warrants I told you about, which are currently in the money. They might very well expand the drill program beyond the 30,000 meters that Founders has planned for this year. And well, that's actually where I want to pick it up, Colin, because those warrants, if exercised, are what, $7.5 million that they would bring in. Do you have the ability and willingness to, I don't know, maybe call those in earlier and get more drills on site to do more meters this year?
Well, we're down to about 11.5 million warrants outstanding right now.
Okay.
As of just recently. So about, yeah, $5.5, $6 million left that could come in from them. And as you said, you're very deep in the money. We don't have an accelerator clause on either of them, but just with the place that they are relative to the current share price, we've been seeing them pretty consistently or pretty steadily trickle in, kind of on a weekly basis, really. That's been good. So, you talked about the November 30th number was, 5.8 million kind of thing. We're just over 5 million today. And so we've been kind of, paying the bills essentially with warrants,
Nice.
while also doing quite a lot of drilling. So,
yeah. And the way things stand right now, what is your gut telling you? Are you going to be able to increase the drill program beyond the 30,000 meters?
Yeah, I think that we're kind of leaning in that direction. It depends a little bit on that exercising of the first stage of the option agreement, because there's a cash payment if we want to accelerate that and do it this year. And so I think that there's the ability to get that right around 2 million Canadian to cover that. To have that money come from warrants, I think that's an option. So
right. Okay.
Yeah.
And it probably depends on the assay results that you're going to get back from it. But if there were more drilling than the 30K, where would that be focused on? Like, would it be focused on Froyo still, or is it? Do you have any other targets that you think are of that have priority?
Oh, absolutely. Yeah. There's right now, so one drill, kind of same story as last year. Honestly, it's going to stay at Froyo, and we'll continuously be drilling that, and it'll be doing both extension, along strike and width at this point with the new zones that we've been hitting. So one drill is going to be there. The rest of the meters, we've got some wildcat targets from geophysics, geochem work done last year that we're testing right now that are pretty interesting. And then we'll be going down to Boise. And so, if we're expanding the program, but even as part of a decent part of that 30,000 meters, we'll go into the Boise area later this year.
What's a decent part percentage wise?
10,000 plus meters at Boise.
Okay. Yeah. Okay. Good. That's actually, because you call them wildcat targets that are based on geophysics, and that's partially answering a question that I had, but I was just wondering, relative to historic drilling, where are those holes falling? Like, how much of a step out are we talking about here most of the times?
Well, we have a couple of them. They're quite a ways away. Like, when I'm saying wildcat, I'm talking about places where there's not been any historic mining, historic drilling, anything like that. So we're building a pad. If right now the one that we're drilling is along strike or northwest of the donut area, by about 500 meters. So quite a ways away from that operation. So, right. And then we have another one planned kind of to the southwest of that, or southeast rather. That would be another kind of 500 or 600 meters away from the donut area. So, we're looking at testing kind of a kilometer long strike over in that area.
That's also, let me tell you where I'm coming from with this, because I've been wondering whether the drilling, what was it, 30-something thousand meters that they drilled historically, whether they stopped drilling because they didn't like what they were seeing sort of on the periphery of that, or was it something else that sort of stopped them from drilling? But I also see that it coincided with the GFC, because it was 2008 that they were drilling. So I'm thinking, basically, what happens once you start stepping out, away from those drill holes, and whether you can still keep delivering those grades that you have been delivering so far?
Well, that's the big question. There's no question when you step out and start doing, completely new area exploration drilling, it's usually harder to guarantee the same sort of success rate that we've had so far. We've hit mineralization in every single hole we've drilled so far, which is pretty fantastic to be able to say. But the exploration holes are just that. They're exploration targets. They're further afield, but they're exciting for the same reasons, geochemically, geophysically, structurally, from the mapping that we've been doing on the ground. So there's a lot of strong potential.
Yeah. But also, as far as I understand it, the holes that you're drilling right now are just not mere numbers where you say, 26 meters of whatever, 5.5 grams, and that's it. Like they're telling you more of a bigger story, if you will, because as far as I understand it, after I spoke to Pascal in Germany a few months ago, you've been able to pin down basically 4 mineralizing events for this land package. And are those recent assay results, are they helping you better understand what's driving the mineralization and sort of the higher grade pockets here?
Definitely. Yeah. It's a combination of the results. I mean, the results are us testing hypotheses or ideas that we've put together, largely from the geophysics. IP in particular has been very important to our understanding of the geology and the structure and what's controlling the highest grade mineralization, but also bedrock mapping, structural geology. We have an excellent structural geologist that works for us. He did his PhD on the Yao deposit across the river. So about as well-informed a person as you could possibly get for those rocks. But in terms of what we know and what we've been testing, where we've been hitting the highest grades so far, actually in the Froyo area, is that the dominant mineralization is really along this northwest southeast oriented structure, and that's part of that 8+ kilometer strike kind of gold mineralization that we see from the auger sampling. And that's the dominant orientation for a lot of mineralization throughout the Guyana Shield. But what's really driving, I think, the highest grade mineralization looks to be this later event. It's kind of these upright, open folds, extensional sort of thing where we're getting a bit, I think, a remobilization of some of the earlier gold. And that's where we're getting the quartz veins with the nice VG and that sort of stuff in it.
Right. What drives your targeting? Because you said it's obviously geophysics, the IP, that's most of the times it's a big thing. Then the structural geology. Then what else? I mean, does it have anything to do with the shear zone? Because I think out of the deposits that there are in Suriname, you're the closest to that shear zone. Is that also related to mineralization here?
Absolutely. Yeah. I mean, we're a lot of we're a pretty classic orogenic gold system. And there's a major crustal scale shear that's probably about 30 kilometers away from the upper Antino work that we're doing to the west or southwest. What we're in is kind of a secondary or tertiary splay off of that main structure, and that's pretty typically where you be looking for or want to find these shear zone hosted or orogenic gold type deposits.
Okay, so drilling those wildcat targets, as you call them, I'm sort of hanging my hat on that word there, but what do you? Yeah, are they? Where are they relative to the shear zone?
Well, so where we are in Upper Antino, shear zone's a thing. I think a lot of people sometimes think of a shear zone as being, or a shear structure as being a single line. And the reality is in geology is that this is damage to the crust, associated with this extension or the movement of the rocks. And so you're getting in a shear zone, you might have a number of different shears or structures, all of which can be mineralized. Some would be more mineralized than others. There's a lot of different things that can control that. So where we're drilling now with these wildcat targets, from the geophysics, from the mapping, they sit within what we are interpreting as these shears, similar to the type of thing that we're drilling at Froyo right now. But we've got to drill them to see what's in them.
Of course, yeah. Well, that was actually exactly what I'm getting at, is trying to figure out how similar are they to Froyo, because obviously what everybody wants is for you to find 5 more Froyos, right? So
yeah. Well, Froyo for sure. I mean, Froyo is exciting, but there's 2 different types of mineralization on the property as a whole. Both of them orogenic gold. I think the shearing and all of that certainly is a part of the control. But the 2 types are the Froyo type, where you've got the shear zone hosted gold and kind of quartz carbonate veins, pretty gold only, shear hosted orogenic gold, pretty typical of that. The other type of mineralization isn't going to have as high grades, but it's intrusion hosted. So you're looking at much, much larger volumes typically. So that's the other one that we're looking for. I'd say the bulk of the Upper Antino targets, so kind of everything separate from Donut specifically, because Donut is very much an intrusion hosted target. There's artisanal mining there, so we can walk up and touch it and see it. We know what the rocks look like. the rest of the targets are largely, from what we know of the geology and understand from the geophysics, they're going to be more the Froyo type.
Okay.
Yeah.
The intrusion related mineralization here, is that something comparable to what's happening in Brazil, which is also on the same greenstone belt, the Terra province, which is sort of a copper gold, well, it's mostly a copper gold province. Is that sort of in a similar type of mineralization, or is it different?
Usually you don't get a lot of copper associated with the orogenic type systems. It can be more epithermal or porphyry type, system in general. I think something that I compare, a good comparison would be the Omai deposit in Guyana. That would be a good comparison for the intrusion hosted piece.
Right. What I was getting to, where I'm coming from with this, is because there's another company I'm interested in that's exploring on the other side of that greenstone belt, so in Cote d'Ivoire, and they're working with an IOCG/intrusive thesis. So I was wondering if you think there's potential for that somewhere on the land package that you're looking at right now.
It's hard to say. I mean, the beauty of being in a greenstone belt or being in this package of rocks is, there's potential for all kinds of different deposits. Gold is, I think, from the historic work and people kind of panning up the river, panning up creeks, that sort of thing, has been the easiest to find because of the jungle cover and all of that. But there's certainly potential for all kinds of, base metal deposits, VMS or volcanogenic massive sulfide deposits are a possibility. Diamonds, there are diamonds in some placer operations in places over Suriname and the Guyana Shield. Like there's a number of different potential deposit types, but right now gold has been the focus historically, and a lot of the geochemical work that's been done, regionally, has been largely focused on the gold piece as well. But yeah, there's opportunity.
Sure. Okay, but focus right now, Froyo. So Froyo is going to see at least 20,000 meters, because you said 10,000 is going to go into the other target, and then Froyo is going to see 20,000 meters at least.
I'd say 15 to 20,000 is where we're targeting with under the 30,000 meter program. Okay. The thing is with the Antino project is that we have year-round drilling. So we don't have any limit on timeline. We're not really dealing with it's all budget dependent. If we have the money, we just keep going. We don't have a seasonality. We drill 4 months in the summertime and then, wait for assays and come back the next spring. So it'll be a continuous thing until we're, I think, get enough meters in the ground to work towards that first resource, and then kind of continue on from there. Ideally, building resources in other targets or other parts of the property as well.
What is enough? Like, what does enough mean here? Because what were you getting into, Froyo? Does it sound like enough to be able to come out with an MRE by the end of 2024?
I don't think by the end of 24, no. And talking in general, looking at a kind of a first resource, by Q2 or Q2-ish 2025. Really, in terms of enough, when you talk meters, all I can do right now is compare it to some of the other examples in the Guyana Shield for our big comparators. Reunion Gold, for their 4.2 million ounce resource that they just put out there, about 75,000 meters of diamond drilling, a lot of trenching and some RC work as well. And then 50,000-60,000 for G2, if I remember correctly, on that order. So we're about 10,000. Actually, right now we're probably about 12,500 meters into Froyo, and moving at pace, I guess. 2 drills running full tilt, we'd be between 3,500 and 5,000 meters a month.
Okay.
So we expect kind of a couple thousand meters a month, I'd say, at Froyo with the 1 rig. And if we do wind up adding more rigs down the road, then that pace increases.
Right. If you were to add more rigs down the road, by the way, that's also a good point. Would you would you be buying rigs, or is it going to come from your partner, or are you thinking contracting?
No, we'd be looking at expanding our current operation and buying our own rigs. Yeah. At present, we've been building our team, building our crews. The production has been very good. And we just have a really good team and really good infrastructure on the ground. We have it figured out, I think, and so buying a 3rd rig and keep going the way we're going, build another crew, another team, and keep moving forward is really the best case scenario. It's certainly the most cost effective.
Right.
Yeah, it takes a bit more time than just calling up a drilling company and adding one in, but the cost savings and everything have really been important to our story, and it's worth that extra effort.
Right. And who knows, by the time you sell this deposit, you might turn into a drilling company for a new gold rush and then contract your own drills to other drillers, to other explorers. That'd be nice.
Yeah, I mean, there certainly is value in a drilling company in its own right too. So,
Sure.
As a total side note, and not at the same scale as obviously what we're targeting in terms of major deposits here, but there's it's worth something.
Yeah, that's an interesting avenue to think about for sure. Are you planning any metallurgy, by the way, in the meantime between now and MRE?
We are, for sure. Yeah, we're kind of reviewing proposals right now for beginning metallurgical testing and we plan to begin sometime the next couple of months. But on both the tailings, really interested in understanding a bit more about that. But then also, the major kind of metallurgical tests that you'd expect. So the different major lithologies within the ore zones, that sort of thing.
Right. Okay. So what are you starting with, bottle roll or something along those lines?
Yeah, that'd be the first go, and then after that, it's kind of evaluating what the recommendations are.
Right. And the tailings that you mentioned, that's something you want to have in the 2025, excuse me, MRE, as far as I understand it.
I don't know if the tailings get included in a resource estimate. It's a good question. I mean, it's a bit of a separate beast from like the Froyo zone, that sort of thing. It requires a different type of sampling, it's a different operation, really.
Okay. Do they typically not get, I don't even know, like, do they, like, are you allowed to typically include them?
Well, absolutely you can. Yeah.
Okay.
And it's the same sort of idea. I mean, we've done mostly just, 2-meter auger sampling. We've done some trenching to get a sense of what minimum thicknesses are. But you can definitely, grid off, and, it's the same kind of idea. You need a certain density to understand, what the heterogeneity or homogeneity is within the gold grade within the tailings piles, and understand volume, all of those same sorts of pieces. And once you've established a certain confidence, then yeah, it can be included in a resource.
Interesting. Yeah. Because it's something that Pascal also told me about when I met him in Germany. That those tailings are significant, and they contain significant grade too, as far as I understand it, right?
Yeah, there's most of our tailings work so far has been in Upper Antino. We put a press release out on that a while ago last year. Around the Froyo zone, we had grades, I think 9.17 grams per ton was our highest sample, but several above 5 grams per ton. And our average for the Froyo stuff was, 3.35, which is incredible, especially since the majority of that material is kind of sub 2 mil, ready to be reprocessed or material. It's some people joke and say it's pre-concentrated, but the other stuff around the donut pit, it's intrusion hosted target, so the grades there match with that. They're in the order of 0.75 to 1.5 grams per ton, but a lot of volume. And then we've kind of got an eclair cupcake tailings pile as well that's ranges between kind of 1 and almost 4 grams, which they're spectacular numbers, and there's significant volume. Big picture, Froyo represents only about 20%, I'd say, of the overall tailings on the property. The vast majority are at Boise. It's a whole other beast in terms of tailings opportunity.
So if an initial MRE would only contain the tailings at Froyo and the drilling at Froyo, and then Boise would come in later on, or how do you see that?
The tailings, as I said, in terms of timeline and what would go into an initial MRE, that depends on how we move forward with the tailings. When I talk initial MRE, I'm thinking specifically right now, Froyo, Upper Antino, and depending how quickly we progress with the Boise stuff, there's potential for that. But I'd say predominantly we're looking at the Froyo area first, with subsequent updated MREs following based on other discoveries or expanding at the Boise stuff. The thing with the tailings, or what the trade-off study or the conversation really is because of the permitting situation at Antino, we have the opportunity that we could put those into production, or we could start working with those right away. We could also, work with a partner organization with some sort of offtake agreement. We could have a third party come in where they invest all the capital, and we have a royalty arrangement with them. There's a number of different ways that we could generate some revenue from those tailings in a relatively near term, and that's an interesting option, and doesn't necessarily require going through a full mineral resource estimate type work.
That's something interesting that I haven't really thought a lot about, because what I was kind of speculating, or like if I were to throw out some wild guesses in my own head, I'd be thinking something like, again, as you said, MRE 25, PEA in 26, and then potentially a transaction in late 26 or 27. How does that, I mean, if I sort of spit that timeline out, how does that make you feel?
Yeah, sounds great to me.
Yeah, but I mean, it sounds good, but is it doable? Is it realistic?
I think that it's very much realistic. I think, it really comes down to results as well. If we're seeing, significant growth with the Boise area, there's a number of further afield targets. We've only explored, or historically, only about a third of the property's been explored. So, we're looking at doing some, regional or full property geophysics and things to, look at some targets further afield. So if we're seeing some really big things coming out of that work, and there's opportunity to continue to grow kind of the value side of it for investors, then we're going to do that before we look at any sort of acquisition or buyout situation. But ultimately, we're moving forward, I think, like Junior should probably, and that's we want to move towards development in the de-risking sense. Doing all of the steps in the right order, but really you're de-risking with the goal of being acquired.
Right. Yeah. Yeah. Well, as a junior should, I agree with that statement. What do you think? And this might be sort of a two-folded question, but back of the envelope and forward-looking risks, yada, 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 and all that type of stuff. But again, back of the envelope, how big could this MRE or this PEA get? And so first part is how big could it get? And second part would be how big do you want it to get before a potential transaction?
Those are hard questions to answer at this point in the process. I mean, I think specifically for MRE or PEA or acquisition, I couldn't give an answer, a real number right now. I don't think that would really be fair in general. But the property as a whole, certainly Upper Antino has pretty strong potential for a multi-million ounce, gold deposit. Boise, there's 27,000 meters of exposed totalitic intrusive rock, at surface there, with some pretty interesting hits so far in it. So there's opportunity there, certainly, even just with that as another multi-million ounce potential target. And I don't doubt that there's other ones elsewhere on the property. So the ultimate answer there, I think, comes with a bit of time and a bit more drilling.
Sure. Yeah, that's a fair answer. I mean, I understand you cannot tell me too much about that right now. It's also just really early. But I mean, again, back of the envelope, I'm trying to sort of wrap my head around how do you value this? And I know a lot of arm waving here and way forward looking, but yeah, I also don't know quite how to value a potential takeover target in that part of the world, partly or mostly because I don't really know much, but also partly because there aren't all that many examples to go off from. So what does your gut tell you? Like what's an ounce of gold in the ground in Suriname worth at a takeover?
So the two examples that you have, in kind of recent time or recent history is, you've got G2 and you've got Reunion. And if you look at the two of them, it's fluctuated a little bit here over the last few months, but by and large, they're getting about between $80 and $90 US per ounce, to enterprise value. And so for looking at that, a million ounces in the ground with a resource is, that's about $130 million Canadian in terms of market cap. So that's 1 million ounces. And I think multi-million ounces is very realistic. So, that's where you get your multiples from, is doing that math.
Okay. Well, you mentioned Reunion. Was Antino at some point did it have something to do with Reunion?
It did. Reunion, the guys at Reunion held it 2006, 2008 timeline.
Oh, that's right. Yeah, that's right.
Yeah. They did about half of that 32,000 years historic work. The other half was done by Golden Star Resources back in kind of the late 90s, 98, 99.
Right.
Yeah.
Okay. Good. Okay, so that gives me an idea of how to value that. And again, I mentioned a couple of times that I spoke to Pascal in Germany. He told me that the option here could potentially get renegotiated if I had understood him well. Is that actually the case? And what type of renegotiation are we talking about here? Like what's possible?
I mean, certainly renegotiation is possible. And I've had conversations with the optionors. I mean, they're business people and open to offers kind of thing. But the way that the option agreement is structured right now, it goes to 75% over those 3 stages. But after stage 2, that 7% mark, it converts to a joint venture with the optionors. And that joint venture agreement has a proportional spend component to it. And so if they're not contributing, we can dilute them down to a 10% level. So, whether or not they can come up with the capital, I think that remains to be seen. But it does give us an opportunity there to move it, higher on the ownership side for founders just from doing that.
Higher in terms of like that would be 90% then.
That'd be 90%, yeah. And then dilution below 10% basically comes with either a conversion to NSR as one option, or if we're at that stage looking at if there was an acquisition scenario, and there's also a tag along clause where the optionors have to come along for the ride in terms of us negotiating something as a buyout. Yeah.
So that would be a potential route to 100% ownership.
Effectively, yeah.
Okay. Does that depend on what comes out of the ground there, or is that just sort of corporate stuff dependent, like negotiation dependent?
Yeah, I think it's a timing thing. It's results in what's coming out of the ground, and it is a bit of some negotiation, but a little bit of all 3, I think.
Okay. Well, looking at the table here that says a 3-stage option agreement. Stage 1 total in total commitments, $7.8 million bucks. How far away are you from that?
I'd say mid 24. At our current pace is where we hit that number.
Right. Okay. And then stage 2, that's probably PEA type of thing because we're talking about 13 million total.
That's right.
Yeah.
Okay. Right. But then because with the timeline that I described here, sort of PEA 25, MRE 25, PEA 26, and a potential transaction in 27. By that time, that's also when you think you're stage 3 or even further.
Certainly stage 2 and then into that. Like stage 3 is an option. We don't have to do stage 3 as it's kind of dictated there. We can move forward from stage 2 in kind of the joint venture scenario. But yeah, either way, I think that's kind of the mark we'd be aiming for. I mean, realistically, I mean, if I would like to accelerate our ownership, as quickly as we can. I mean, get into this 51% piece, but then, into completing stage 2 and on from there. I think the sooner the better, really, for founders and for founder shareholders.
How come though? Like I saw that sentiment out there as well, is that people are sort of hoping that it happens sooner. But if you're not selling this and you're moving it forward for like the next 2 to 3 years, why does that matter?
Yeah, there's a couple of things. So one of them, in terms of the broader, market sentiment, I'd say it's just ownership in general. Having a controlling interest in the property, there's a certain kind of additional level of confidence, that comes along with that. And, I can appreciate that. And I certainly feel the same way. I'd like to be able to say, we've exercised this first stage of the agreement and founders has the controlling interest. And so that's why we're heading in that direction the way we are. After that, though, it converts to, founders with the controlling interest of the property also, has the option to become the alluvial managers. So the rights to kind of how things operate on the ground and also, access to potential revenue coming off the property. We're getting 51% of the project, but also 51% of any potential revenue that's being generated. And so whether that's a if it's status quo for the kind of artisanal or the contract miners that are right now working for the concession owners, we could be looking at some dollars from that even. So there's a couple of things there that kind of make us want to move towards those milestones as relatively quickly as possible.
On what timeline are we talking about potential revenue here?
Well, if it's a case of revenue from just the earn-in side of things, that would come with exercising the 51% or the stage 1.
Okay.
So that could be later this year potentially.
What type of size are we also looking at?
Well, it's artisanal mining, so there's numbers for the last kind of 12 years is what we have data on. I think we'd expect something in the $1 to $2 million US range per year is what I would expect if we have things stay status quo. Right now the type of mining on the ground, like the artisanal mining, is very low recoveries. It's pretty common throughout the Shield or really anywhere where this sort of artisanal work's being done. On the order of 20 to 30%. So there's opportunity even for working with that to improve recoveries. I think there's a number of things that could be done that would make a big difference and wouldn't be necessarily very cost or very expensive. Also, grade control piece. There's a lot of kind of pretty straightforward technical work that we could add to that process that might increase the revenue side of it. But also comes down to when we think about future resources and what the economics of pit design and all of that look like, maybe we don't want to mine some of those areas. So it's there's a number of things to balance, I guess.
Yeah, for sure. And that's actually kind of cool. I think Aris Mining is doing in Colombia. They're obviously an operating mine, so they're a producing company. But they have an agreement with artisanal miners. They've helped them increase productivity, so recoveries and stuff like that. So that's it's very cool. That'd be cool to see. And still, like $2 million a year. That's not nothing. That gets you a decent portion of drilling.
Yeah, and decent portion of drilling, especially at the cost per meter that we're sitting at. But also, you start thinking about covering G&A and all of those sorts of things. It does make a difference to the bottom line,
right?
And that's why we have an interest in this tailings piece as well. I mean. We're talking a lot about this. I want to be clear too for people that my background is exploration and orogenic gold, and I think that is our focus on number one, and that's a big part of the reason why we'd be entertaining or looking at offtakes or third-party arrangements for the mining side of it. Our focus really is on the exploration. That's the big win here, but there's this potential for revenue that presents an opportunity for founders to potentially generate enough cash flow that we're not in a situation where we're having to go back to the market and facing that sort of continual dilution that is so common in this space. Ideally that's what we'd like to avoid as much as possible and add a little bit of scarcity to the founder shares.
Of course, yeah. Well, and it's also because you mentioned G&A, and that made me think, as I said at the beginning, last year on average, or last quarter on average, you did about 150 grand a month. That's give or take $2 million a year. I mean, if you can become an effectively net zero G&A company, if you will, that would be kind of cool. Is that what you're budgeting, by the way, for 2024 as well? Because the drill program is much bigger. So are you thinking higher G&A as well?
Higher G&A, but that number is, I think in terms of average over the year, will be quite a bit less than that. We had some kind of prepaid annual type expenses that were included in that.
Okay. So what are you budgeting a month for G&A?
I think we'd be around 100 at this point, and we've got a good portion of the crew in place in terms of the management level people for bringing a third rig on. That sort of thing. So I wouldn't expect a huge increase in G&A associated with that level of increase. But obviously the burn's going to go up. I mean, we're adding meters and that's where the cost is.
Yeah. Adding meters obviously attracts a higher spend in some spots. What else I'm reminded of that it potentially attracts is that indeed a very large drill program that, especially for Suriname as well, I believe this is the largest drill program this year. So, it's inevitably going to attract the attention of the regulators more closely than potentially what you did last year. Is that Is that a risk? How much of a risk is that? Like, how does that even work over there?
No, the way it works is so that's another thing that kind of comes with the concessions, the type of concessions we have. So there's exploration concessions and there's exploitation concessions. Those are two main types in Suriname. We're right now both. The map always kind of puts them together because they're contiguous, but it's actually two contiguous concessions, both 10,000 hectares, which is standard for exploitation rights in Suriname. And that includes all of our, if we're drilling for exploration, that's all included in that. So there's no additional permitting, based on the scale of meters, that sort of thing. So no, we don't anticipate or foresee any issues with growing the program that way.
Okay. In terms of in terms of potential local opposition or environmental or something along those lines, it's also, I believe, you have to fly into the project, if I'm not mistaken. So it's in the jungle basically. It's not in a village or anything like that.
That's right. Yeah, we're about, well, depending on the plane, it's 45 minutes to an hour flight to the main camp. There's a 1.3 kilometer strip right there at the main Antino camp. There's no villages in the property. We're in the jungle. There's the town of Maripasula that's across the river, across the border into French Guiana. That's probably the closest population center. That's about 10,000 people there. Yeah.
And for you specifically, I believe you're mostly working with locals, so you're flying them in on a 2x2 basis, sort of a 2-week in, 2-week out, or how do you deal with that?
The rotations vary. So we do hire it's a Suriname first policy as much as is possible. If we can source people in country, we do, and we work pretty closely with our partners kind of on the logistics and hiring piece to make that a possibility. Also, as the longer we spend there, the more kind of relationships, networks that we build, and we find more people that can fill roles in country. As far as rotations go, it really depends a little bit on the job. We're typically working kind of 4 and 2s would be the most common rotation for people. And yeah, if it's people coming from outside of the country, depending on what their roles are, they can be a little longer or they can be shorter if it's a more kind of focused activity that they're doing.
Right. Okay. Fair enough. So, and where I started with this was sort of talking about attracting unwanted attention, maybe. What about if we flip that? What about attracting wanted attention, as in, again, Newmont or the Chinese, given that they both operate mines in similar conditions on the same greenstone belt? Are they, I don't know, coming along, kicking some stones around? Is that something you can talk to me about?
Yeah, I think in general, I could say that, there's strategics in country that have some interest in the project. I mean, and elsewhere. I mean, we've talked to a number of, larger groups that certainly have interest in the property. I mean, with the grades that we've been putting out, with a really attractive piece is how quickly an operation can be brought to production at a number of different scales in Suriname or in the Guyana Shield as a whole. So yeah, there's interest for sure.
Okay, and you don't. I mean, you don't need an asset level partner right now. You have the money to keep pushing this yourself. You don't need any type of partner for that matter, at least not at the current levels because of that availability of warrants, as we talked about and all that. But I don't know. Do you think eventually you will need a partner before a sale? Or, I mean, yeah, how do you think about that?
I mean, I think there's a lot to be gained from having a partner before a sale. As you say, we're in no need to rush into something. We're not in a situation where we don't need it right now. But down the road, I think there's a lot of, just the scale that comes with, having a partner that is a major. They have a infrastructure, just resources that just aren't available to a junior company to move things forward. And I think it's important. And also it adds a lot of credibility to a project as well. And just the political will that comes with, working with a major mining company, also, is an important piece. So, yeah, there's a lot of benefits. And I think, the market typically responds quite positively to companies, kind of joining forces with a major to move something down the line. So,
yeah. I suppose it depends on the type of upside that the major is getting versus the type of upside you're getting, all that type of stuff. But that's
Absolutely, yeah.
TBD, of course, here. Good. We've gone through a lot of stuff here. What are you thinking? Another news release before PDAC?
Definitely. Yeah.
Okay,
Yeah.
one or two?
We'll see. but more news for sure before PDAC. We're Founders is also attending the BMO conference in Florida, so we'll be doing that, and then heading to PDAC right after.
Yeah.
So it's going to be a busy next few weeks.